standalone external debt to 475 crore from 3,831 crore. And net worth of the company stands at roughly 9,041 crore. And they've cleared dues to LIC, Edelweiss, ICICI Bank, Union Bank and others. So it's definitely a positive for Reliance Infra that it's clearing out its debt.
All right, thanks a lot for that, Mahima. Now moving on, SBI Chairman C.S. Setty has addressed concerns regarding the rise in small value unsecured loans, particularly for new to credit customers. Speaking at the BCC&I Financial Markets Conclave, Setty assured that there is no immediate cause for worry. He also added that the RBI has implemented data-driven lending mechanism and a secure framework to manage loans. Listen in.
Small value loans are having problem. I think the ticket size of 50,000, 1 lakh rupees, and mostly
those individual loans, not MSME loans.
Not MSME. I think at this juncture, that is the reason why the risk weights have been increased on the unsecured lending, mostly to the personal segment. This was also because the large number of new to credit customers have entered the market. They were first time borrowers. Obviously, the credit discipline is there to set in them. One structural modification what RBI has done is, much of this unsecured lending happens based on the bureau data, right? And the new to credit customer who does not have credit history, somebody makes an attempt to lend to him, and even before his credit history is established, he is borrowing from multiple lenders. That is because the bureau data gets refreshed every 2 months. And 2 months is a long time for many of these people to borrow multiple. And that is what's impacting their ability to pay. Today, RBI has come out that within 15 days, the refresh has to happen, which means that the database lending will become much more robust.
And moving on to global news, in a series of explosions across Lebanon, at least 8 people have been killed and 2,750 injured after handheld pagers reportedly detonated. Health Minister Firas Abiad stated that 200 of the injured are in critical condition and are being treated in over 150 hospitals. Reports indicate that Hezbollah operatives were among the casualties, with injuries extending to Syrian figures and even Iran's ambassador to Lebanon, Mojtaba Amani. Social media has been flooded with videos capturing the devastation and the chaos in hospitals. Reports are pointing towards an Israeli cyber attack as a possible cause, though no official statement has been made by the Israeli military so far. Staying on with global updates, former US President Donald Trump said that he will meet Prime Minister Narendra Modi in the upcoming week when the Indian PM will be on his visit to the States. He made this announcement while campaigning in Michigan. PM Modi is set to visit the US from September 21st to 23rd. He will take part in the Quad Summit and address the Summit of the Future at the United Nations General Assembly in New York. The visit will start with the summit hosted by President Joe Biden in his hometown, Delaware. And moving on, back to some national news, the first phase of Jammu and Kashmir Assembly elections are underway. This marks the first Assembly election in the Union Territory in a decade and the first since the abrogation of Article 390 in 2019, which stripped the region of its special status. Over 23 lakh eligible voters cast votes across 24 constituencies in 7 districts today. The turnout recorded was 26.7%. That's as of 11 a.m. today. My colleague Nazir Masoodi gives us more details from the ground.
Well, if the voting percentage goes like this and continues like this, it's expected to break all the records. And since morning, as you mentioned, in the first 2 hours, it was 11% voting. In some place, I know in first 4 hours, it has crossed 25%. It is really a celebration of democracy. Despite apple harvesting season here in Pulwama, people are actually coming out in large numbers to cast their vote. You can just see these queues, these lines tell you the story that all these people have been waiting for their turn to cast the vote, and they will decide the fate of 219 candidates. 40% of them are independents. It's not, while many people are saying, parties saying, look, it is being done, independents are being field it, to divide the vote. But let me remind everybody that in 2008, the number of independents was much higher than it is today.
All right, that's all we have on the show for now, but do stay tuned to NDTV Profit for more news and updates. Thank you for watching.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome. You're watching the Mutual Fund Show. I'm Tamanna Inamdar. This is your one-stop destination for all things mutual funds and your investments. Now, today we're talking about the Nifty 500 Index Fund. If you want to bet on the Indian equity market as a whole, you can go no further than the Nifty 500 Index Fund. It's a fund which mirrors the Nifty 500, which is an index which has the top 500 companies on the Nifty. So the most comprehensive market index in India, undoubtedly. So it covers 500 of the top companies across large, mid and small cap. They offer a broad diversification and exposure to nearly 92% of the market cap of the NSE. There's been a recent launch also of an NFO on the Nifty 500 index fund, so there are a lot of products out there as well. The question we're going to be tackling today is this the right choice for your portfolio? If you're looking for an index fund, don't want to restrict yourself to the top 50 stocks on the Nifty, and don't want too much of a downside risk either. Are the potential returns worth the risk? To talk on this, I'm joined today by Pankaj Matpal, founder and CEO of Optima Money Managers, and Rin Agarwal, financial educator and founder at FinSafe India. Welcome to both of you, and thank you so much for joining us. Great to speak with you as always on this show. Pankaj, let me begin with you in terms of returns. What are the kind of returns that such index funds, ones that essentially mirror the Nifty 500, what are the kind of returns they give?
Tamanna, good afternoon. See, Nifty 500, because it represents 500 companies listed in the equity market in an NSE. So you are investing in large cap, mid cap, small cap. If you see long term, you can expect around 15% CAGR from this kind of index. And but one has to understand, because your investment is across the market segment, across large cap, mid cap, and small cap, so your investment horizon should be longer.
In fact, you know what, let's look at the one-year returns of some of these top funds before we move ahead, and just put into perspective exactly what we're talking about when we talk about the Nifty 500 funds. So this is the average one-year return and three-year returns, because some of these funds have not been around for 3 years. These are the top ones. So the MOSL Nifty 500 over a year has given 35% returns. In 3 years, it's a bit more tempered, 16.5%, nearly 17%. The ICICI BSE 500 ETF has given a 36% return on average, and 18% return in the last 3 years. The HDFC BSE 500 ETF has given a 36% return. Obviously, they're all mirroring the index, so the one-year return is pretty much the same. So an average of 36% is what you are getting, and it mirrors what happens out there. Now, Rin, if you look at it, it's not. It's a pretty decent return, since it's a passive fund, lower costs. Is this a good choice for someone who's looking to put in money and doesn't want to think about it too much?
So good afternoon, Tamanna, and lovely to be here on the show as always. Well, I would say that it really, the choice of investing in this fund really depends upon what is your existing portfolio, because when you look at the NSE 500 index, the top 50 stocks, which is the Nifty 50 stocks, have a 60% weightage in this particular index. And if you look at the Nifty 100 stocks, they actually have a 73% weightage. So in effect, this fund, this index is quite top heavy and large cap oriented. And if you see the balance, 400 stocks are from the mid cap and the small cap space, and that is around 27%. So, you know, while it does give you access to the broader markets, we must remember that given the fact that the index is constructed based on free float market capitalization, it does tend to have a very high exposure to large cap stocks. And so, you know, in effect, what I would say is that if you already are having Nifty 50 index fund in the portfolio and you're going to add this on, there would be a very high overlap on the stocks that you're actually holding between these funds. So in those cases, I wouldn't actually recommend it. For someone who's new into the market, who wants to take exposure to the broader markets, they could look at it.
Okay. So what kind of, let me come to you on that question, Pankaj. What kind of an investor should be looking at these funds? And there's a new NFO on the block also. Is there an option one should be looking at?
See, Tamanna, first thing, as you mentioned, as you showed the graphics, like in last 1 year, Nifty 500 delivered around 34%, 35% returns. But investors should not go with the 1 year return. See, when you are expecting long term or when you're investing for long term, that 15% around CAGR, what I mentioned, is the right expectation. Second thing, who should invest? See, if you want to invest in multi-cap funds, then this is a good choice because it covers large cap, mid cap, small cap, everything. So that is why if your objective is to invest in multi-cap fund where you want to have allocation across the market segment, across the sectors, then it is a good choice. But if you want to invest for a shorter term, for a large cap bet you want to take, then I think that Nifty 50 or Nifty 100 fund can be a better choice. So investors who have investment horizon for more than 7 years, want to take the exposure across the market segment, who have moderate to high risk appetite, they should consider investing in Nifty 500 index fund.
Okay, so moderate risk appetite is what you need to do. Now, among these, Marin, and that's where the question gets a little tougher, among the current options, if someone is looking for this kind of a fund, which one do you prefer? Or does it not matter? Because at the end of the day, they're just mirroring the index performance. But having said that, what is a fund that you would recommend someone to take up if they're looking for such a broad market exposure, and what proportion of your entire investment should go into a fund like this?
So Tamanna, I would again reiterate that, if you're already holding a Nifty 50 index fund, by investing into this fund, you're really not getting further diversification. Also, when you look at the rolling returns, which are a better way to look at returns as well, more realistically, if you look at the rolling returns, there is not much difference in the rolling returns between the Nifty 50 TRI and the Nifty 500 TRI as well, right? So again, what I would say is that if you're already holding a Nifty 50 index fund, I wouldn't actually recommend a further investment into the Nifty 500. I would rather say that if you really want the diversification, then go in for Nifty Midcap 150 or maybe a Nifty Small Cap 250 index. That would give you better diversification. Now, if you're not holding a Nifty 50 index fund, and you want to look at a broad-based funds, I would always look at an existing fund which has track record, whose tracking error is also known. So I would say then look at the Motilal Oswal fund.
Okay. So Motilal Oswal fund is a choice. Pankaj, I'm going to come to you on that question as well. Which fund of all relatively better, and percentage of allocation, or you would say avoid completely?
No, I would not suggest anybody to avoid it. One can definitely invest in Nifty 500 fund, because if the objective is to create wealth in long term, and you want to, for example, you want to start SIP where you have only 1 or 2 funds in your portfolio. So this kind of fund can be a good choice. Yes, as far as name is concerned, Motilal Oswal Nifty 500 is a good choice because of low tracking error, low expense ratio, and with a performance history. But as a segment, as a category, I will not rule out that one should not invest in Nifty 500 in your portfolio. Definitely, you want a diversification, and you have a choice. Either you invest in one large cap, one mid cap, one small cap, or through one fund you can get exposure across the market segment.
Yeah, okay. So that is the upside of it. Through one fund, you can get the entire market exposure as well, and returns are not half bad. You don't have to think about it too much. On the downside, maybe you restrict your options as well. All right, let's come to some of your queries. Manish Prajapati writes in to us, and remember, if you want to get our experts to answer your questions, those numbers on your screen. Manish Prajapati is age 37, says he is looking to invest 1 crore rupees with a 15-year time horizon. Says my goal is to reach 5 crores. I'm looking at an SIP of 1 lakh per month, and to do a lump sum when the opportunity comes. I'm willing to take a moderate risk. What are your suggestions? Well, interesting question there, because the number is not insignificant. 1 crore rupees, 15-year time horizon. And in 15 years, he wants 1 crore to go to 5 crores. So Pankaj, let me start with you, and with that basic question. The time horizon and the ambition, are they matching?
Exactly, Tamanna. Even I calculate at a CAGR of 12%, 1 crore rupees invested today will grow to around 4.78 in 15 years. So close to his target, what he's expecting.
Okay.
So that is
So
that is
not,
quite
so not an unrealistic target. Target is fair. He might even exceed it.
exactly. And he says that he will invest 1 lakh rupee per month along with that. So he can expect around 10 crore rupees in 15 years with this investment. So the target is quite means reasonable. And if I recommend some schemes for 15 years, he can consider like Kotak Multi-Cap Fund, ICICI Prudential Multi-Asset Fund, Bajaj Finserv Flexi Cap Fund, and Motilal Oswal Large and Mid Cap Fund. So all diversified funds for 15 years time horizon.
Okay, okay. So those are some of those picks that you have. And you know, the second part of it, Mrin, I'm going to come to you on the second part of it, and of course you can address the basic question as well. He says, I'm looking to invest a lump sum when the opportunity comes. Now here is where the devil lies in the details, because how do you know the opportunity has come? I think that's the million-dollar question, isn't it?
Absolutely, and I think I think this is what happens when you have a bull market for 4 years, that overconfidence creeps in, and we feel that that we can spot these opportunities. Honestly, it's very difficult, and I would just say that set up a SIP, right? And of course, keep some money aside if you feel, and as and when, if you feel when there is a correction and you feel it's a good time, you can look at putting in some money. But I would say that for a majority of the money, set up the SIP and just get going with that.
Okay, so keep it as an SIP. That is safer, definitely. Pankaj, I'm going to ask you that question because I know you face it many times. When is the right time? And before and after every big event, I mean, we have a big event coming up in terms of the Fed rate cut. It's likely to start off a cycle of rate cuts. Everyone's going to be wondering what to do next. Is this the right time is a question you will ask. How do you know? And especially for this viewer who's written in who says they are willing to take moderate risks.
Tamanna, it's very difficult to time the market, and that is why SIP helps in averaging out your cost. That's a better choice. But yes, as you mentioned, sometime when we feel that because of some event, for example, before election, like we were expecting that time that if the result will be what kind of result we were expecting and what would be the impact of that. So if that kind of some events are expected, something or like Fed rate cut right now, based on that, you can definitely increase or decrease your exposure. But otherwise, very difficult to time the market. My suggestion for retail investors that they should invest in staggered manner. SIP, STP is a good choice for that.
Okay, SIP and STP is a good choice. Better to have it in a staggered manner, especially since your investment amount and your timeline is not unrealistic. So you don't have to do anything out of the box. Stick to the straight and simple and you'll get there. Sandeep is joining in, age 58, says, which is the best balanced advantage fund to invest in for the next 5 years? Sandeep, thank you so much for writing into the question. Mrin, I'll start with you. Why don't you start by giving our viewers a sense of why a balanced advantage fund, what is a balanced advantage fund, and what are the pros and cons?
Balanced advantage funds are investments where they invest both in stocks and in bonds. So they have both equities and debt in the portfolio. Now, the percentage allocation between stocks and bonds is going to differ based on an internal metrics created by the fund house. So it could be on PE ratio, it could be any quantitative metrics that has been developed by the fund house. So based on that, they vary the allocation between equity and debt. So the good thing is that what happens with balanced advantage fund is that they do the rebalancing for you within the fund, and it is not something that you have to do. So like, for example, you have the ICICI balanced advantage fund, wherein when the markets are at a high, then they will automatically reduce the allocation to equity and move into debt and vice versa. And of course, this is done at regular intervals. You also have other funds which, for example, might follow a momentum strategy, like, for example, Edelweiss. So each fund in the category actually has a different set of quantitative parameters based on which they do the rebalancing. But net for the investor, it's a great investment because in this one fund, you can get your asset allocation done in debt and equity, and the rebalancing is also happening automatically. So from a moderate investment perspective, this is highly recommended. And again, you choose the fund based on the sort of risk that you would want to take. My recommendation would be the ICICI Balanced Advantage Fund.
Okay, so ICICI Balanced Advantage Fund is something you could look at for the next 5 years. Pankaj, I'll take that question to you. 5-year timeline is good enough for a Balanced Advantage Fund?
A hybrid fund which invests in equity and debt both. So 5-year investment horizon is a good time to invest in. But one thing I would like to mention here, see, balanced advantage funds are basically dynamic asset allocation fund which invest in equity and debt based on the market that allocation is changed by the fund managers. But some funds are like pro-cyclical, some are counter-cyclical. That is why all the balanced advantage funds are not following the same model. So if you want a scheme where you want that aggressive allocation in equity, then Edelweiss Balanced Advantage Fund or HDFC Balanced Advantage Fund can be a choice. But otherwise, if you want more downside to be protected, then ICICI Prudential Balanced Advantage Fund can be a better choice.
Okay, let's go on to the question Rahul has sent us, age 37. He's looking to invest 20 lakh with a 7-year time horizon, needs lump sum investment advice. So let's start with the basics. First of all, if you're looking to invest 20 lakhs with a 7-year time horizon, Pankaj Matpal, I'll come to you. Should this investment be done in a lump sum?
Yeah, exactly. See, when you say lump sum, does not mean that in a single day you have to invest the whole amount. You can divide it in 4 or 5 parts, or maybe that 6 installments. So you do STP of 6 weeks, something like this one can invest. But I would not suggest that somebody invest that money in 6 months or longer period when the money is already available, because sometimes that you keep buying at the higher rate. So either you divide in 4 parts, 5 parts and invest on your own, or you start STP of a weekly STP of 6 weeks, something like that, so that in 1.5 months, you invest that total money. So that is a suggestion from my side.
What are the kind of funds he should put this in? So,
yeah, because
so
7
first
years.
You're saying not lump sum, and then you're saying look at STP, etc. So over 7 years, what is the kind of breakup that should be done for a 20 lakh amount?
Yeah, see, 7 years is a good time period as such, means he can take some risk. And in this case, I'll suggest that a scheme like FlexiCap, Bajaj FinServ FlexiCap Fund can be one choice, or Motilal Oswal Large and Mid Cap Fund. So not a pure small cap fund, I would recommend to him, but some diversified funds which invest majorly in large cap and mid cap, that kind of funds can be considered.
Okay, let me come to you, Mrin, with that question. Suppose there is a requirement to do a lump sum investment for whatever reason. What should that breakup look like? And if there's a choice, go for an STP or an SIP?
I agree with Pankaj that he should consider doing an STP and not wait too long to deploy the funds. Also, in terms of the fund choices, I would go in for more conservative funds over mid cap and small cap funds. And I would suggest Nifty 50 index fund like ICICI or UTI. And he can also consider some flexi cap funds like Parag Parikh Flexi Cap Fund and HDFC Flexi Cap Fund.
Okay, so flexi cap fund seems to be the choice that both our advisors are talking about. Let's look at the question coming in from Natarajan Ramanathan, aged 55, says, I'm looking to invest 10,000 rupees a month for over 7 years. I can't choose between the UTI Nifty 50 Index Fund and the ICICI Pru Nifty 50 Index Fund. Which one should I go for? First of all, let's start with the basics. Our viewer, for aged 55, Mrin, I'll come to you first, says that they want to invest 10,000 rupees a month for the next 7 years. Is an index fund and a Nifty 50 index fund the best choice? Let's start with that first and then come to which one.
I think it's a good choice, especially given his age. I think it's a good choice. And Tamanna, for a lot of investors, it becomes very difficult to figure out which fund to invest into. So by investing in a Nifty 50 index fund, you're really participating in the India story. And in that sense, I think it's a good fund. Now, between both the funds, honestly, again, when one looks at the rolling returns, there is not that much of difference in the returns. Of course, UTI does have a slightly lower tracking error. I think it was 0.04 in the last 1 year versus ICICI having 0.06. So you could go in for either of them because tracking error at the end of the day is the main thing to look at in the index fund. That said, UTI is lower in tracking error, but if you look at the returns, they're pretty similar. So he can make his choice based on this.
Okay, so, Pankaj, does it really matter if it's an index fund after all? It's not like the fund manager has to do much.
See, there's a difference between tracking error and expense ratio, or because of expense ratio and some more things that tracking error is different between different funds. So here, as Mrinal explained just now, so difference is not much. If you say last 1 year, even the tracking error is not much. I mean, there is no much difference between two funds. He can choose any one of them.
Okay. In your view, Pankaj, is an index fund, a Nifty 50 index fund, a better idea? And let me hark back to a question which is the topic of the show today. If I have to choose between a Nifty 50 index fund and an NSE 500 index fund, which one would be preferable?
See, it depends that your risk appetite, your objective investment, your investment horizon, especially for this viewer, Natarajan, because he had mentioned that his investment horizon is 7 years, his age is 55 years. So considering these this information, my suggestion would be that Nifty 50 will be a good choice. But if a young investor wants to invest for longer duration, in that case, even mid cap, small cap, or if somebody wants to invest in a multi-cap, then Nifty 500 can be a better choice. So it's not that each fund will be for every investor. One has to see that what is the objective and how much risk one can take. As I mentioned, for Natarajan, this is a good choice. Otherwise, Nifty 500 can also be considered. And beyond that, there are many factor investing fund, smart beta fund. Those make better choice for many investors.
Okay. Joe's writes in to us, age 53, says, I want to invest 70 lakh rupees on a flexi cap fund. Which one should I go for? Great question, Joe's, and thank you so much for writing in to us. So, Pankaj, here, they've not mentioned whether they want to go lump sum or, STP or SIP, but assuming the age, you'll probably not do too long of an SIP or an STP, and the amount is also significant. First of all, if there's 70 lakhs to invest, should it be in one go, and how much of it should then go in a flexi cap fund?
See, again, because information is not complete here, if the investment horizon is something like 7 years or more than that, then flexi cap fund can be considered along with some multi-asset allocation fund. But flexi cap is a good choice because it gives you opportunity to invest across the market segments. At the same time, fund managers have flexibility to decide that where they want to have major allocation of the total asset. So Nippon India Flexi Cap Fund, Bajaj Finserv Flexi Cap Fund, or ICICI Prudential Flexi Cap Fund, these kind of Flexi Cap funds can be considered. And if I want to add something more to this, like as I mentioned, multi-asset allocation. So ICICI Prudential Multi-Asset Allocation Fund is a good choice, which gives you a choice to invest across the asset classes like equity, debt, gold, etc.
And which is the best flexi cap fund in your view?
Yeah, like Nippon India Flexi Cap Fund or Bajaj Finserv Flexi Cap Fund, ICICI Prudential Flexi Cap Fund, these can be considered.
Mrin, what about the flexi cap funds of your choice? Because that's essentially his question. Which one should I go for in terms of a flexi cap fund?
Well, I like Parag Parikh Flexi Cap. I think, the international exposure is an added advantage in that fund. And I like the HDFC Flexi Cap, good fund for long-term holding, has worked out over long periods of time. So these are my two choices.
Okay. So Sheel is joining us, and I think I'll just be able to squeeze in one more question. He's 24, started investing 4,000 rupees each in the Parag Parikh Flexi Cap Fund, something Bryn just mentioned, and the HDFC Nifty 50 Index Fund this month. He's also planning to invest in mid and small cap funds. He's seeking some recommendations. Yes, Bryn?
So if you're looking at mid and small cap funds, I like Mirae Mid Cap, and I like SBI or Nippon Small Cap. He could look at either of these. And actually, I would say that if his horizon is long term, then look at the small cap funds, because the actively managed small cap funds, there are quite a few funds which have consistently beaten the benchmarks very well. So I would actually suggest more on the small cap side, considering that he already has the Nifty 50 index fund and the Parag Parikh Flexi Cap fund.
All right, thank you so much, Amrin and Pankaj, for joining us today, and for all our viewers also who have tuned in and sent us your questions. In fact, if you want to write in to us, the number is on your screen. We're happy to take your questions and have our experts answer it. But for now, that's all the time we have on the show. Stay tuned for a lot more to NDTV Profit.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past. Hello and welcome to NDTV Profit. You're watching Large Trades, this show where we talk about all kinds of bulk and block deals and market moving stocks and sectors. I'm your host, Mihika Barve. Let's just first take a quick look at how markets are faring in today's day of trade. Well, we do have the benchmark, which has slipped into the red very sharply over the day. It's down about almost 0.3%. And when you talk about the top losers and what's dragging the index down is the IT sector. We have TCS, HCL Tech, as well as Infosys and Tech Mahindra, as well as Wipro, seeing cuts of over 3% in trade today. And we have actually all the IT sectoral constituents in the green right now. When we talk about what does have strength, well, there are companies like Bajaj Finance as well as Shriram Finance that have seen gains over 3%. When you look at the broader markets, they are
underperforming the benchmark. It's the Nifty midcap 150. That's the top index that is down 0.8% in trade today. The weakness comes again with a host of IT stocks, Oracle Finance, as well as Emphasis and Loris Labs that have seen cuts of 4 to 7% in trade today. The counters that are doing well, we have BSC, Torrent Power, Devyani International. BSC is actually one of our top gainers today. It's up over 16% right now. When you look at the Nifty small cap 250, well, it's seeing cuts about 0.4% right now. When you look at the stocks that aren't doing so well, we have Blue Dart. The stock was up yesterday, so seeing some profit booking today. It's down about 5%. We also have cuts of 4% on Glenmark Pharma and JM Financial. But a group of stocks that are in focus are the Inox group stocks. We have Inox Wind and Inox Wind Energy up in trade today. And to talk about the latest development for the Inox GFL group, we're joined by Devansh Jain, who's the executive director at the Inox GFL group. Good afternoon, Devansh.
Good afternoon, Mahika. Good to be back.
Yes. Let me first start congratulating you on the 300 crore equity capital fundraise that the group's privately held renewable energy power generation platform has come out with, which is IGRE Renewables. Now, let me start by asking you, how will the fundraise be utilized and what are the set targets for this subsidiary?
Look, so as a group, we're trying to be at the forefront of the entire energy transition mega play. I think that's one vertical where we are very, very strong at the entire group, be it Inox Wind, Inox Green, our EPC arm, or even our forays in EV and green hydrogen. So I think what was a natural progression for us was to set up an IPP platform for a lot of our captive requirements and also to leverage higher power prices across the CNI platforms and on the power exchanges. And to that extent, we've now consummated that by formally launching IGREL Renewables, which is basically Inox GFL Renewable Energy Limited. We have raised 300 crores. We've pumped in as promoters as well. At this point in time, it's a single-digit dilution. The larger objective being to create a 2 gigawatt platform over the next 2 odd years, which is going to be a mix of wind and solar hybrid so that we can supply maximum power across the group, across CNI players. I think we are well capitalized at this point in time to get to about 600 megawatts, which becomes self-sustaining to get to about a gigawatt over 2 years. We would have another raise sometime next year, which would be on similar lines, maybe a little bit more to take us close to 2 gigawatts. So that's the larger plan. The overall investment would be close to about 12,000 crores, which would be a mix of debt equity. So equity would be about 25%, both primary from the group as well as internal accruals. So that's broadly what we're doing at this point in time.
Devansh, an installed capacity target of 2 gigawatts by FY27. Could you give us more details on what the locked-in capacity is right now? What's the target for FY25 end? And what will be the breakup between solar and wind be as well?
So broadly, we're looking to do about 50-50. So about 1,000 would be wind, 1,000 would be solar. Broadly, what we would like to do is by March to June, we would like to do about 500 megawatts. By next March, so I would say March 26, we would like to exit at upwards of 1 to 1.25 gigawatts. And then by 27, get to about 2 gigawatts. That's the broad plan. We've got about 600 megawatts of PPAs and LOIs in the system. And as we now progress, I think we're in discussions for a lot more. I think we should get to about that 2 gigawatt number very, very comfortably.
In terms of the current locked-in capacity with respect to solar, how much of those orders have been placed?
So we've placed orders for about, I would say, almost finalized or placed orders for about 200 megawatts in solar. And we're looking at placing about 300 more megawatts of solar over the next 30 to 60 days. So we're toying around with capturing a part of that pie as well. So that's the reason why some of it has been delayed. Otherwise, we would have placed 500 megawatts of solar already. But I think in the next 30 to 45 days, we should be almost 500 megawatts of solar orders placed out and awarded in the public domain.
Okay, got it. And the capex plan is 12,000 crores over the next 3 years. How much of it will be infused in FY25? And how do you all plan to fund this capex? Could we see more debt?
Look, again, I mean, this is at the promoter level. So the debt is not in any of the operating entities. As you're well aware, at the group level, we are net cash Obviously, if you're setting up an IPP platform, it is 75-25. Given the returns are phenomenal for us, we're capturing a larger chunk of the entire energy transition piece. We've decided to keep this at the promoter level and not get any of the operating companies to invest in non-core assets, which is power. As I mentioned too, we are well capitalized for about 600 megawatts of equity. This would automatically fund a gigawatt from internal accruals. And as I mentioned, we would do another raise next year, which would be on similar lines, plus minus slightly more, to get to enough equity to get to 2 gigawatts. I don't think there's tying up equities, whether from the promoters or from third-party investors, is something which is a cause of concern for us. I think at the group level, the group sits on about 12 to 13 billion of market cap. So this is a very, very small chunk. We're letting people ride with us. We want to create more value for the larger ecosystem and create more value across shareholders. So I think that's what we're looking at doing. On the debt side as well, I think the group is very, very strong financially. We're net cash, as I mentioned to you, at the group level. So frankly speaking, tying up debt for such strong PPA-backed projects is fairly is not rocket science for us at the group level.
Okay, let's also, shift focus and talk about Inox Wind. Now, the order book stands at 3.5 gigawatts, which is a revenue potential of around 21,000 crores, if I'm not wrong, given the average 6 crores per megawatt. Does the execution guidance of 800 megawatts still remain the same? Because you have seen, more order inflows come in for the company.
Look, for this financial year, we are not upping the execution guideline. However, we have mentioned there is potential for the margins to go up beyond what we've guided. While we may not officially do that, I think there's a strong possibility profitability will be stronger than what we've guided. Having said that, for FY26, we have certainly said that there is a very strong chance of higher execution as well as much stronger profit margins. We will officially possibly talk of that as we move forward. But yes, at this level, we are seeing that there is going to be a stronger execution next year and much larger profitability next year. 27, we're clearly gunning for 2 gigawatts. So to that extent, it's still a way, but I think that's a very, very large ramp up. We're very, very strongly placed, I think, in terms of margins, in terms of the order book now, very well diversified, very strong. And as we sit, I think we're still negotiating for multi-gigawatt of orders at this point in time. So I think it's a matter of time we officially upgrade guidances for Inox Wind.
And, given the strong demand traction, do you feel the manufacturing capacity is currently sufficient, or are there plans to increase that on that front as well?
Look, we did announce last quarter, I don't know if that was captured well, we are setting up a new manufacturing plant in Gujarat. It's close to our blade and tower plant near Ahmedabad, which goes live over the next 2 to 3 months for nacelles. That would increase our capacity by about 800 to 1,000 megawatt. We're doing that to be closer to supply chains, to sites. Again, we've not done capex in that. We are taking that on lease rent for the next 10 years, where the lease is sub 4 crores a year. So we are being very, very prudent on capex, getting other people to capitalize, do that for us. We're really, we would rather look at more free cash flows. We may announce another plant somewhere in the south as we move forward, given a lot of demand coming in from the south as well. But I think we have sufficient manufacturing capacity, and we are adding to it to capture more as we see the market expanding beyond what we had envisaged.
Okay, so possible expansion in the south given the traction. And, I want to end with asking, now the company did secure a license for the 4 megawatt wind turbine platform. The commercial launch is by FY26, but could you give us more details and updates regarding the same, and in terms of, revenue potential as well?
Look, I think currently we're fully focused on a 3.3 megawatt platform. As you know, in 2 quarters, we completely transitioned from 2 to 3, which is probably the fastest transition we've seen. We are, in terms of supplies this year, about 95% of our supplies this year would be on our 3 megawatt platform. Yes, our 4X is progressing well. That's something which we will launch next year. A lot of our customers understand that the cost of energy of the 4X is far better than the 3. So they are more than happy to gravitate and move towards our 4X supply chain as we get there. There's no pressure on us. We're doing it in a very organized manner. We are ramping up beautifully. I think we have molds coming in every 1 or 2 months. I think, but next year, I would estimate that almost 40% of supplies next year would be about our 4X platform. But, again, I think our 3X is very competitive. 4 obviously is more competitive. But, we have the flexibility and the freedom to play with our customers as we launch better products.
Thank you so much, Devansh, for giving us that insight and, telling the viewers about the possible shift in your order book as well in terms of the new wind turbine generators coming in. And we wish you all the best going forward.
Thank you, Mehika.
Yes. Well, that was the management of the Inox GFL group talking about the latest development of their renewable power generation platform. But we're now shifting our focus to the markets, and we're going to talk about the Nifty IT and the IT pack as a whole, which has been greatly under pressure in today's day of trade. Cuts of almost 4% now, down about 3.6%. When we talk about volumes also, let me just address the top, top gainers in terms of high volumes. You have Emphasis TCS. Emphasis was 2 times the 30-day average. TCS volumes were around 1 times the 30-day average. Emphasis hit an intraday low of 5.9%, whereas TCS an intraday of 3.4%. And to talk about the sector as a whole, I'm joined by Rucha, who tracks the space very closely. Rucha, Nifty IT down 3%. Yes, the Fed decision today, has a part in that. But are there any other company-specific news driving the weakness?
Right. So, as you rightly mentioned about the Fed decision today, so it is one of the most important factors that influence the IT space, because the Fed rate cuts influences client decisions, and then, clients might tighten or even widen their budget and accordingly spend on IT, which can affect the revenues for Indian IT companies. So, apart from the Fed decision, we have 2 news buzzing today. Number one is Accenture. Well, Bloomberg reported that the company has announced a delay in promotion from December to June. So this cycle will get delayed by 6 months, and they also are planning to shift the entire promotion cycle, which currently is a December cycle, to June cycle. Now, the likely reason behind this would be that in December, the clients generally decide on their budget for the following calendar year, and therefore the company has shifted the or is planning to shift the promotion cycle to June, to the June quarter, so that they get more clarity on the kind of ESOP or employee expenditure that they can undertake based on that room. So Accenture is one of the reasons that is likely weighing on the Nifty ITs today.
Okay, but let's also talk about the domestic aspect, especially the IT major TCS. Now, analysts are talking about muted guidance from the management for Q2. So, could you give us more details on the same?
Right. So you're right, Mihika. TCS, the IT major, is in focus today. It is at a 1-month low, is down about 4% in trade. Now, most of the analysts are hearing from the management, in fact, that the Q2 will be muted. Now, let me clarify that TCS does not give quantitative guidance, but they likely, talk about what kind of margin or demand are they looking forward to. So in terms of qualitative guidance, TCS has said that Q2 will likely be muted, and the BFSI space, that is the banking space, will also likely be a bit of struggling mode, and North America as well. Now, North America and BFSI are the spaces where most of the IT names, get majority of their revenue from, and these spaces are likely to be in a kind of a struggle zone over here. Also, because of this, most of the business will likely come from India in the second quarter. India is just like a single-digit kind of revenue contribution for TCS. So we'll see what TCS will likely give us wherein it kicks off the second quarter earnings soon.
We also had a Macquarie note on TCS and Infosys, and that does seem to be reflecting on the stock. Could you tell us what the broker
you're
said?
right. So in terms of comparing TCS and Infosys, the 2 IT majors, Macquarie prefers TCS over Infosys because it largely believes that the revival in demand, if any, which were to happen in CY, that is calendar year 25 next year, will largely benefit TCS because most of the clients will prefer bundled deals, and TCS has an upper hand hand in this space over Infosys. And also, TCS has been growing more rapidly, is what the analysts state, as compared to Infosys in the period after COVID. And in terms of valuations, both are trading around 24 times the consensus FY26 EPS, around 27 times, my pardon. And this implies that the consensus estimates expect growth and the earnings growth, especially, to be in line with Infosys, is what the consensus estimate is happening. So, kind of very consensus view by Macquarie, but doesn't seem to be reflecting in the stock, as the stock is down about 4%.
Okay. Thank you, Rucha, so much for joining us and giving us, the outlook on the IT stocks. But we're now shifting our focus to the chemical space. Now, we have certain stocks that are up in trade, Balaji Amines, Himadri Specialty. But one stock that stands out is Alkyl Amines, which is up over 7% on the back of some developments in the space itself. And we have Varsha joining us to give the key details on the same.
For that, so yes, Alkyl Amines is buzzing. Now this is due to expectations around anti-dumping duty on one of their key products, acetonitrile. This acetonitrile is actually used in pharmaceutical perfumes, then rubber products, pesticides, and then nail remover and batteries as well. So if this anti-dumping duty comes, this is actually a positive thing when it comes to Alkyl Amines, because the key product that they sell is acetonitrile. Now, companies also manufacture of aliphatic amines, which is used again in your pharmaceutical industries, in rubber, plastics, and textiles. Now, around 40 to 50% of their revenue comes from this amines, while 20 to 25% comes from specialty products like acetonitrile. So, acetonitrile, on which anti-dumping duty is expected, forms a major part of their revenue. Now, this anti-dumping investigation was initiated in March with the hearing to be held on October 16, 2024 for imports from China, Russia and Taiwan. Now, verdict is expected by Q4 FY25 as per Alkylamine con call in May 2024. Now, the one concerning thing is, if these duties are to be imposed, competitors with lower production might increase their market presence. Now, let's see what is the growth outlook for the company. So, they are expecting a volume growth guidance of around 10 to 15% for FY25, and their ethylamine margins are expected to return to pre-COVID level at around 20 to 22%. And then their new products are actually import substitute products, which will help to aid their margins. And the FY24 capex was around 120 crores, which in FY25 they're planning almost 60 to 80 crores for maintenance and debottlenecking.
Thank you, Varsha, for giving us those insights. It's actually a trend that we've been seeing for quite a few days now, where the government and the DGTR specifically has been starting anti-subsidy or anti-dumping investigations on various products in the chemicals and metal space especially. But the next counters that we do have in focus is HEG and Graphite India. Now, both these counters have been buzzing in trade today. HEG up about 12.8% on an intraday high basis. Graphite India up 10.9% on an intraday high basis. Both these counters do also have high volumes compared to their 30-day average. Like you see on your screens right now, HEG 23 times is 30-day average, and Graphite India 20 times. Now, a little bit about the companies. Well, HEG is a leading manufacturer of graphite electrodes and has a significant market presence both domestically as well as internationally. Graphite India is also a prominent player in the graphite electrode industry, and products include graphite products, electrodes, and more. Now, they cater to industries, like the steel and aluminum foundry sector. What a graphite electrode basically is, it's made from scrap metal and caters to various of the metal industries itself. Now, the main reason why the stocks are buzzing on trade is because of a potential price hike. Now, this was announced by the largest graphite electrode manufacturer, Resona Graphite, last week. Now, the company has announced a minimum 20% price hike on all their new graphite electrode orders, and because of this announcement, the optimism surrounding other top players hiking their prices has increased, and that's why the stocks are buzzing. Now, when we talk about why a price hike is important, well, the potential price hike, first of all, will stop the decline in the graphite electrodes prices that have been seen in 2024, and this has mainly been driven by China and overcapacity and oversupply in the space. Now, the price increases not only stop this decline, they also could lead to price hike by other players, and then companies like HEG and Graphite India could follow and could see improved profitability, because the demand for the products is very high in a domestic sense and is expected to grow, and this is commentary given by both the managements itself. And the main driver for the higher demand, especially in India, is the higher decarbonization efforts in the steel industry, which are expected to boost demands. But now we move on to an NDTV Profit exclusive, where we learn from our sources that the government is fast-tracking a review of Income Tax Act 1961. Now remember, the Finance Minister had announced modifications to the IT Act in July 2024 budget. Shrimi?
Yeah. So what we're hearing from our sources and government, that government is fast tracking this review of decade-old Income Tax Act 1961. What we're picking up from our sources that they during the deliberation they have identified up to 120 sections, subsections, and clauses which could be scrapped, which is there in the existing IT Act. What we are also hearing that there could be, exemption and deduction which are old and have no relevance at this point of time, that could be removed, and those are mainly in special economic zone, capital gains, and telecommunication sectors. We are also hearing that during the deliberation process, the V.K. Gupta committee, it's an internal committee by the CBDT who is reviewing the whole direct taxation, the comprehensive review of direct taxation in line with the July 23 budget announcement, is that there would be no direct tax code like the earlier proposal. There could be simplification of the existing IT Act is what we are learning from our sources. What we are also picking up that they could take help from Law Ministry and some expert to draft the law in order to simplify it, to make it lucid and concise for people in general. And in fact, this whole review is aiming at, that should be complete in the timeline, which is 6 months given by the government, and could be introduced in the budget. However, there is also deliberation going on that whether to bring in amendment in the IT Act or to have the existing act will be removed or could be introduced a fresh act altogether. That deliberation is still going on. Back to you.
Yes, thank you so much for giving us all those details. We now move on to some primary market action. Manba Finance, which is a non-banking finance company, is all set to open their initial public offering on September 23rd. Now, my colleague Sajid Mangat caught up with the Managing Director Manish Shah to understand the growth picture of the company. Listen in as we wrap up this edition of Large Trades.
My business model we are into two-wheeler financing. So when I started, I will just take back you to the past, before 2 decades, when I thought that I want to be active in financial sector. So I thought that let's, go into lending sector and want to lend to a product where the risk is divided amongst many. So we chose the product two-wheeler. We were DSA for 10 years with the ICICI Bank, HDFC, City Financials. And then 2008, we started our own financing in the Manba, and presently we are at 6 states, and we are into all kinds of two-wheeler financing, and basically we are concentrated on Maharashtra, Gujarat, Rajasthan, and newly introduced states like Chhattisgarh, MP, and UP. And the whole idea is to reach out the customers where they are less access to credit. So we are rightly placed in the city as well as the rural. So tier 2, tier 3 also we have covered and doing well.
Can you take us through your breakup of your disbursement or revenues coming from tier 1, tier 2, and tier 3 cities?
So basically I will give you the disbursement deck ratios from the Maharashtra, it is almost 70%, and then 20% is from Gujarat and 10% from the rest of the states. And in the Maharashtra, the complete tier 1, tier 2, the division is around 55% and 45%.
Give us a sense of what has limited you to only financing two-wheelers, because you are primarily a two-wheeler financing company, and do you plan to move out of two-wheeler to expand your offerings to four-wheelers as well?
Yeah, so we want to become a diversified financiers. So the journey has been started, of course, with the two-wheeler, but now we want to, add a new product, three-wheeler, especially electric vehicle three-wheeler, used car, and top-up loan, which has been given to our own customers, and small business loan. These all are the people we have less access to the credit. So we want to explore this possibility, and that's why we are diversified our portfolios and products. We are adding some products also.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
watching India market close, and it's been a tough afternoon. Markets losing steam, the only exception there really being the bank Nifty. But look at what's happening on the Nifty. The sharp drop there mid-trade today, midday today, and continuing even now. Day's low 25,285. So we're off the day's lows, but still about 70 points down, a mild recovery there. So it's an important trading session. The next 1 hour will be important because it's sort of the last leg before a very, very big global event, which will have ramifications for days to come. The FOMC meet will end today. You will see 11:30 p.m. India time, the decision that the Federal Reserve has taken, and it's likely that they will start cutting rates finally after March 2022. So that's the nervousness you're seeing over here. Let's pull up the heat map as well and give you a sense of what has been happening in the markets today. I mean, I would say from the start of the day, the theme has been very clear. Banks are up, IT is down. That seesaw continuing, and very, very sharply on the lower side are your entire IT companies, set of IT companies. Will the mood change if there's a 50 basis point cut from the Federal Reserve tomorrow? I'm not sure, but at least for now, TCS really taking it on the chin. Some of their commentary about their second quarter has been less than exciting for analysts. That's hurting them. The entire pack also down because of commentary coming in from Accenture, the world's largest IT company, really, saying that they're postponing pay rises for another 6 months based on their outlook. And that is being seen as a sign that demand is going to continue to be soft for a lot of Indian IT companies which focus or are impacted by the way the US economy and the demand there moves. That's bad news. That's why you're seeing TCS, HCL Tech, Infosys, Tech Mahindra, Wipro all in a row there, really getting hit quite hard. But on the other end of the spectrum, of course, you have the banks saving the day. Shriram Finance, complete rocket today, doing very, very well, nearly 5% up in trade. The Bajaj twins back in favor after losing some steam yesterday, in part thanks to a brokerage note which has been very bullish on Bajaj Finance. So Bajaj Finance and Finserv, both the companies doing well today. ICICI Bank, HDFC Bank, I mean, in a sense, the return of the private banks, with SBI also not half bad, 1% up as well. Let's just pull up Nifty contributors for you, and you get a sense that this would have been an uglier picture as far as the index is concerned if not for the heavyweights really coming in. And HDFC Bank, really, I mean, all the glory going to Bajaj Finance today, but HDFC Bank is really the savior this afternoon for the Nifty overall. I'll just pull up quickly advanced decline ratios before Harsh comes in with what's happening on the broader end of the spectrum as well, because you can see the pain there. Nearly 1:3 is decline to advances to decline, and that gap widening. So buckle in for what could be a pretty rough ride over the next 1 hour, Harsh, as markets try to figure out what to do. I would say the Bank Nifty, the only outlier, and that spot of green. Absolutely. On expiry day, yeah.
Yes, Tamanna, absolutely. Bank Nifty, the only saving grace. In fact, things would have been much worse had Bank Nifty not really done what it's done today, 1.2% higher, and we'll probably talk about that as well. But onto broader markets, the Nifty mid-cap down around 0.9 odd %. The Nifty small cap slightly better in relative terms, down around 0.5% thereabouts. So that's how the broader market, at least on the benchmarks in terms of broader markets, is playing out. But let's talk about some specific stocks, because there are some very big movers within the BSE 500 top gainers, top losers list. Let's pull those up. A lot of the list dominated by names in the IT sector. Let's look at the losers first, because the breadth of the market weak and skewed towards losers. So let's talk about some of those. Blue Dart yesterday did very well in trade. Today getting beaten 5% lower, some bit of correction coming there. You're seeing Glenmark Pharma, Abbott, Laurus Labs, so some pharma names as well under pressure outside of something like a JM Financial, probably one of the very few names in the financial services space in the red. Torrent Power, 1.5 gigawatt order win if I recall right. HEG Graphite, both up 9% nearly. And on the back of course, the top graphite manufacturer in the world hiking prices by 20 odd %. So some of those are big movers. Let's pull up and see what an REC is also doing. And plenty of moves within that segment space. REC over the last month or two has not done as well. Of course, flat in trade now as we speak, even though it was higher by around 2% odd. In likely the announcement being that there's an issuance, and it's a rare one. REC has planned to issue deep discount bonds. Company plans to hit the corporate bond market in the next fortnight or so. And we are in exclusive conversation with the Chairman Managing Director Vivek Kumar Devangan. And actually Vishwanath Nair is leading that conversation. So let's quickly go in, dip in, listen into that conversation.
Some kind of indication globally, hopefully that will translate into a lower cost of funds in India as well. I just wanted to get your viewpoint, as a company that is in the leverage business, how are you looking at cost of funds evolving?
We hope that going forward the cost of funds may come down. We are waiting for US Fed rate, which is likely to be announced today. And we have kept our borrowing mix, judicious borrowing mix. We keep raising funds through corporate domestic bond. We do take domestic term loan from the banks, and we also take external commercial borrowing, and our 54 EC bond is the cheapest source of fund available. So we keep a judicious mix of our borrowing profile so as to not depend on a single source of borrowing.
Just for my understanding, sir, so if a company does, such as yourself, does decide to go down the deep discount route, eventually when the rates do come down, does that not pose a bit of a mismatch on the cost front?
Yeah, that's what I had told you. We have not taken a call on this issue. We are exploring all the available options, keeping short-term, long-term, medium-term requirement or fund requirement, and we will take action or decision accordingly.
Okay. There was also a statement to the exchanges which talked about REC signing a large number of MOUs, specifically in the renewable space. You signed about 1 lakh crore, or above 1 lakh crore, about 1.12 is what we learned from that statement. What is this focused on? How exactly are these MOUs going to be implemented, sir?
This RE Invest has organized by Ministry of New and Renewable Energy, and REC has given a letter of commitment that is called Shapath Path to MNRE, stating that we intend to increase our renewable energy portfolio to say about 3 lakh crore by the end of 2030. In this direction, we were able to sign MOUs worth 1,12,000 crore with various companies. With these projects pertain to solar, wind hybrid project, storage solution, pump storage hydro projects, battery energy storage projects, C&I operations, electric mobility, green hydrogen, green ammonia, solar module manufacturing, wind turbine manufacturing, entire gamut of the green projects we have covered in these MOUs.
Okay, fair enough. There's also the entire EV ecosystem that you're looking to finance at some point in time. I think discussions for that are still on, according to that statement that you issued.
Yes, we have already financed about 10,000 electric buses, and we are looking for another 40,000 electric buses to be financed. It will depend on the state transport release, which are inviting bids from the prospective OEMs and the operators of the electric buses. Once their agreement is signed, then we'll consider financing those electric buses also.
As a lender, when you're looking at the EV space...
Okay. So that was my colleague Vishwanath Nair in conversation with Vivek Kumar Devangan of REC, and the deep discounted bonds that they're issuing in focus. But really, what is in focus this afternoon is the Bank Nifty. Remember, it's expiry day. The Bank Nifty was expected to trend on the lower side. 52,000 levels was what was being expected. It's surprised with an upside, and how? Nearly 600 points up. 50 to 780, 790 at least on the Bank Nifty. And Harsh, this is something that we've been discussing. In fact, you did a piece yesterday on India Market Open where we were talking about the trajectory of the Bank Nifty ahead of the Fed meet. I mean, we focus on IT from the perspective of Fed decisions, but if you are going to see funds returning to emerging markets, Bank Nifty and the constituents of the Bank Nifty are possibly going to be the first call.
Inevitably, Tamanna, because and it comes on the back of the fact that the Bank Nifty has severely underperformed the Nifty. So you've seen The Nifty Bank give just about 12.5%, 13% returns over the last 12-month period, while the Nifty 50 has given 25% returns. So that's a severe underperformance. The Nifty Bank is also the second worst performing sectoral index in the last 12 months outside of Nifty Media. So outside of Nifty Media, it's the top or the worst performing index. And so in terms of large indices, it's a huge underperformance in that sense. And when you're looking at Nifty 50 constituents as well, 4 out of 5 worst performers on the Nifty 50 are lenders. HDFC, Kotak, IndusInd featuring on that list along with Bajaj Finance, which has had a very strong move today, of course. So excluding today's move, 4 out of 5 of the worst performers on the Nifty 50 are lenders. And just in terms of what the concern areas are, deposit growth is clearly a concern. Regulatory overhang, we've seen a slew of action by the RBI. There's a draft paper on LCR also sitting on the sidelines. If that comes in, will further accentuate some bit of pain on margins. And asset quality has started to slightly worsen in select pockets starting Q1 FY25. We've seen that, right? And therefore, some of those pockets are concerns which have weighed down. But when you're just looking at the way valuations as well as the positives are, first, credit growth extremely strong, favorable macro expected up ahead, and valuations. That's really the key for me. You're seeing SBI, of course, at 1.5 times book, but outside of that, IndusInd, HDFC, Kotak, Axis, ICICI, despite ICICI trading at 2.8 times, you are still at a significantly lower value to the 5-year average that banks have been trading at. And analyst expectations too quite bullish where banks are concerned, especially the top 2-3 are expected to do very, very well, mid-teens to 20% kind of return expectations.
For the entire space, so yesterday, of course, I was speaking with the management of Chola, and this is something that they said as well, Harsh, that the positive impact of rate cuts over here will be another quarter away.
Yes.
So quarter 3 is going to be the magic moment in that sense, when you will have festive demand, maybe push up, more loans as well as margins improving. So we'll wait and see. But let's get Ruchit Jain and Deven Choksi in on the conversation. Welcome to both of you and great to speak with you this afternoon on NDTV Profit. Ruchit, let me start with your take on the Bank Nifty, because everything's about the Bank Nifty this afternoon.
Yeah, hi, very good afternoon to everyone. Well, definitely there has been some sector rotation seen today where, the outperformers such as IT, pharma, some profit booking has been witnessed over there. But the banking was one of the space where relatively, I think the underperformance was there compared to Nifty if we compare with the benchmark index. And due to that, the risk reward ratio has been more favorable in the banking and the financial space. I think that's the main reason why we have seen a good outperformance in the banking names, and especially this is led by the private sector heavyweights, which usually has much better weightage in the index. So I think the near-term trend remains positive. So we may see that Bank Nifty also clocking new record highs, which should be seen as a catch-up move to the recent underperformance.
Okay, so what would be your call on the Bank Nifty right now, Ruchit?
So my call would be to go long on the Bank Nifty index as well. One can initiate on some dips towards that 52,500. Where some put writing has been seen today, so that would act as a support. Now, stop loss should be kept below 52,200, and if it continues, then the previous swing highs were around 53,350. I think one can expect target somewhere around those levels.
Okay, Deven, your take on kind of resurgence in banks, and I'll come to you on the IT pain in a bit, but let's talk about banks for a while. And from the point of view of the big event that we will see in the next few hours, do you see that banks will be the biggest recipients of any largesse coming from foreign funds?
Yeah, so good afternoon, Tamanna. Well, on one side, with the rate cut coming in, which is a reality, this entire process, in my understanding, would probably be carried out over a period of 6 to 8 quarters. Generally, in a hike cycle also, I think you carry out the hikes till 6 quarters or 7 quarters. And in a fall cycle also, I think you basically bring down the rate of interest in 6 to 8 quarters time. Given that possibility that we are now going to be experiencing, now variety of influences will come in the books of the banks. On one side, I think they would have the mark-to-market credit from the treasury portfolio, particularly the large public sector banks. On the other side, with the fall in the cost of the money, is also going to help them in building better amount of margin eventually. So in my viewpoint, I think this is going to be a shift which is from whatever we have seen up till now to that. I think now we are going to be seeing a shift, and that's where probably I think there is going to be a little bit of more exuberance, little bit of more confidence, little bit of higher allocation of money to the sector. At the same time, the country's credit growth is growing and it is picking up well. Also because of the fact that the various programs of the government, be it in the area of infrastructure, be it in the area of industry, be it in the area of social infrastructure, each of these programs are demanding higher amount of offtake of credit. And that's where the role of the bank is becoming more and more prominent hereafter. In my viewpoint, larger the size of the bank, better would be the visibility of earning going forward in this kind of a situation. That's where you are seeing the right shift right now happening into the banking stocks with the sector rotation taking place.
Yeah, and no wonder that HDFC Bank is one of the biggest recipients. Of course, Shriram Finance, Bajaj Finance, the NBFC buzz is also very, very interesting. All right, let's come to the stock of the day. The BSE has hit a record high in today's session as it extends its win for a second day in a row, charting an over 80% surge in less than 2 months. But what really is the reason for this BSE run-up, and is it making any sense? Harsh is telling us what's working and what's not for the company.
Well, not just that, it's been a 3x in a year kind of a story, the BSE stock, and of course much more in 18 months when you're looking at it. So let's quickly look at the bull versus bear case and try and balance it out, try and see what's probably what one also needs to be cautious about with the kind of run we've seen. Of course, benefits from financialization of savings. It's a duopoly industry where BSE is just one of 2 players, and therefore clearly it would benefit from that trend. But it just has a 10% market share in this duopoly, and therefore currently all advantage lies with the NSE, which is the other player. In terms of market share as well as in terms of robustness of the platform, NSE in that sense is slightly tipped and has a bit of an advantage in that sense. Let's quickly look at the other piece. Products are growing. Now, BSE has invested in some new products as well. On the options front, of course, there is a bit of regulatory advantage which has come or been thrown BSE's way on the options front. The other is, of course, your Star mutual fund platform, which has done exceedingly well for BSE, especially over the last year or so, and continues to grow well. But what we have to factor in is competition and how NSE is going to do to counter some of these challenges which are being thrown, and some market share which might get diluted as a result of this. Now, the third point is that when you're looking at margins, you're expecting margins to get better. In fact, profitability and PAT is going to double along with EPS. You're expecting an EPS of roughly 75 rupees per share in FY25, likely going to 90 rupees in FY26. So EPS is set to double from the sub 50 number. Of course, regulatory action further could also dent that profitability a little bit, and one would have to look out for that regulatory action because there's plenty happening in this space. Last off, just with regard to valuations and of course a potential NSE listing, that is obviously going to work in favor of the BSE because that has been the case. The oversubscriptions, the likely excess money will flow into BSE, and that's one obvious positive. But the stock is up 8x in the last 18 months, and trades currently at 40 times FY26. I'm not so sure whether the kind of valuation that it's trading at prices in some of that advantage already. It's up 16% in trade today. Just in terms of what analysts are viewing this, or how are they viewing it? The average of Bloomberg analysts is 2837 rupees a share, which is a 26% downside from here. Is it a time for caution? Well, we've just thrown it open, both the advantages or the bull case as well as the bear case. Leave it to you.
Yeah, absolutely, Harsh. That's an important one. All right, but in the middle of all of this huge news coming in, via NDTV. The cabinet has approved one nation, one election. Now, this is really big. Basically, the cabinet has accepted the proposal of the Kovind committee report. Remember, Ramnath Kovind, the former president of India, was tasked with putting out a report and heading a committee on the feasibility of one nation, one election. In fact, Amitabh Tiwari, political strategist, on the phone line with me, and we'll get my colleague from NDTV on to give us more details on this. But Amitabh, from what I recall, the biggest point of the Kovind committee's proposals was that let's start with simultaneous polls. That's what one nation, one election is. Let's start with simultaneous polls for center and state. And then 100 days later, you have local polls. How big is the fact that just days after Home Minister Amit Shah says it will come in this term, the cabinet clears it? What happens next?
See, essentially, it was one of the main planks or manifesto promises of the Modi government and the BJP. And in Modi 3.0, since day one, the Prime Minister Modi and BJP have attempted to give a message of continuity, regardless of the numbers. So, in line with that strategy, the BJP is planning to go ahead with this. The cabinet has cleared it. Now, the bill will have to be brought into the Lok Sabha. Lok Sabha, NDA has a simple majority. In Rajya Sabha also it has a simple majority. However, the opposition parties are pretty opposed to this idea, and of course, since it's a big move, and it has not only political but economic, social, psychological, various other impacts. So we'll have to see how this pans out in the Lok Sabha and Rajya Sabha. We've seen the Waqf bill has gone to a JPC, so whether this goes to a JPC, whether this requires a constitutional amendment, I think it would. All of this will now have to be taken into consideration.
Now, Amitabh, as far as I understand, you need at least 18 constitutional amendments. I think that's in the Kovind report as well. You need at least 18 constitutional amendments to bring one nation, one poll into place. Some of them will have to be ratified by state assemblies, so it's a long process. The cabinet approving it is step one, but it's quite a bit of process till it happens. Now, in terms of a constitutional amendment, explain that for our viewers. You need a majority in both houses and 2/3 of majority of members present. How does that work out for the current government in terms of numbers?
Yeah, so essentially BJP or NDA has just about half of majority in both Lok Sabha and Rajya Sabha. In Lok Sabha it has 293, 294, and in Rajya Sabha it has half or a simple majority after the by-polls recently. So it means that it would require at least some regional parties from the India bloc pool to come out and support it.
Okay.
Then only it will be able to first pass it in Parliament, which is both houses of Parliament.
Right.
And
Just one second, Amitabh. I'm just going to ask you to just hold on for a second. Aishwarya Jain is joining me from NDTV 24/7. He's broken that story. And remember, we're going to be hearing from a press conference after the cabinet meet at 3 o'clock, so just in a few minutes from now. But Aishwarya, tell us what you're hearing. Do we have any more details on what the actual implementation looks like, or is this just step one of accepting the proposal?
Well, I can tell you at this moment, Ashwini Vaishnav has just arrived and even briefing the media as far as the approvals given by cabinet today. The meeting that happened at Prime Minister's residence at 7 LKM. And yes, of course, it was the Prime Minister Narendra Modi 3.0 term government's agenda that they need to pass the Kovind panel report in 100 days. And today, the Kovind panel report had been brought up in the cabinet that was approved by the cabinet. And yes, this is the first step. Of course, from here on, the bill will be taken in the Lok Sabha to pass. And we have been told that the alliance partners like JDU, TDP, LJP had already given their lot for one nation, one election. They are with the government. and the government on their side is certainly very confident that they are going to pass this bill in Lok Sabha and Raj Sabha. The work will begin from here because this needs constitutional amendments. This needs to be passed from the state assemblies as well. And therefore, the reason perhaps after the delimitation process that was done, it was the Kovind panel report who suggested that, from here on, the further process will start. The government is very confident and they are eager to bring this. Certainly, Prime Minister Narendra Modi and Amit Shah, both the top leaders, have stated not once but several times in the past that One Nation, One Poll is in their agenda, and they are ready to bring into the fray the practicalness, the practicality, and the logistics is something that needs to be sorted out. In this detailed report of the Kovind panel, it is there, and the government will start working from here on.
Okay. Aishwarya, thank you for that. Amitabh Tiwari, the biggest question now is that how are allies feeling about it, key allies of the BJP?
Yes, so I think as Aishwarya said that JDU and LJP are in support of One Nation, One Election. So first, the BJP, since it's an NDA cabinet meeting, so we can assume that the allies are on board. And even if they are not, then the BJP's first step will be to bring the key allies on board. And then we have to see whether it goes on for consultations or brings the bill into the Parliament, Lok Sabha, like it brought the Waqf bill, and then sends it to a JPC. Because if there are 18 constitutional amendments, and some of the amendments also require state assemblies to pass or ratify those bills, then it is a long and arduous process. The first step has been taken in the cabinet meeting. Now we have to see whether BJP adopts a consultative approach. It reaches out to opposition parties, holds meetings, or it directly goes to the Parliament and processes the bill for approval, and then takes steps as required, because it doesn't have the two-third majority in both houses of Parliament.
Okay, so that's what's important as well. Thank you for that, Amitabh Tiwari. They're breaking it down. So this is step one. It's an important step. Will there be now support coming from the India bloc for this? Remains to be seen. What does the TDP say? But of course, before that, we'll wait for the actual cabinet briefing. We'll take a very short break. When we come back, you'll hear from the cabinet as well on this. But we also give you closing strategies, because remember, big day for the markets ahead of the Fed meet. We talk about IT, top sectoral loser, and BTST strategies. A lot more on the other side. Come back.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे, वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Okay, back to markets. Thanks for staying tuned to India Market Close here on NDTV Profit. Major talking point in today's market has been the IT sector. Well, it's come out as the top laggard, of course, down 3% and clearly under some pressure. Rucha's here to explain what's led to this, at least to a certain extent. Rucha.
CS is down about 4% in today's trade, and it has hit a 1-month low. Now, there's one news on the back of this wherein most of the analysts on the street are hearing from the management about the second quarter FY25 guidance. Now, mind you that TCS does not give quantitative guidance, but it only provides a qualitative one. Now, TCS has mentioned that, the North America space and the BFSI, that is the banking space, is slightly under pressure. Now, banking space is the space wherein most of the IT companies get majority of its revenue from. Now, it is also talking about Q2, which will likely be soft, and most businesses therefore expected to come from India in the second quarter of FY25. Now, the growth and the deal wins which were won in the first quarter are likely fizzling out, is what most analysts are saying that they have heard from the management, and hence this is the one which is, might be dragging the stock down. But there's also this Accenture news which came in about yesterday post-market, wherein it is shifting its promotion cycle to June from December. Now, mind you that most of the clients, prepare their budget for the calendar year in the month of December. Hence, shifting a promotion cycle to June, might give a better clarity on how much spending is to be required on those employee costs. So, a lot of bit around the demand environment as well, wherein most of the management mentioned about seeing green shoots. But again, a note by Citi says that LTI also told them about the green shoot that they are facing, but these green shoots might not turn down to revenue. So, giving you an overall picture of the demand in IT, likely stable, but still not good enough to have a revenue growth in the rest half of FY25.
Okay, thank you for that, Rucha. So, 3 reasons why IT companies are trading lower today. And none of them really seem like they might change anytime soon. Okay, I might put the Citi note on the side for now. But let me come to Deven Choksi on the view on IT. We spoke a short while ago, Deven, on the view on banking. Quite the reverse for IT, isn't it? And especially what Accenture is saying, does that stand out as a warning sign for you?
Well, I guess, Tamanna, I think there are a few things which are happening in the IT space, and I think what we are observing, those who are with a niche play in respective space, say for example engineering R&D space, their customers, they want them to produce a solution. Say, for example, I think the companies which are producing the platform for using under the artificial intelligence, I think they would have a niche play for the user class of industry. So that particular change is definitely not going to work against, I think, most of the IT and IT companies. That is what I believe. At the same time, I believe that the model is swiftly changing to the platform as a service. So PaaS kind of model is emerging very, very clearly for most of the users, customers as well of the IT companies. So as a result of which, some number of headcounts are going to be changing from coding to the computing side of the activity. Now, these are some of the profound changes which are happening. Likes of Infosys, likes of TCS have always suggested that how many number of headcounts have actually started reskilling themselves under this environment. So you can't be painting this particular thing at the same brush, for across the board for all the companies. Some of the niche companies will definitely have better business to talk about. Some of the generalized companies will probably have some amount of, I think, near-term hiccups in the entire activity. That is how I look at it. Maybe the IT as a sector, as far as the stock prices are concerned, is best bought when I think the stock prices are corrected or down. I think for 15% kind of a return in a year, I think you really do have to look out for the corrected stock prices, and that's where probably you can make money out of it.
All right. So looking at those prices which have really corrected, not quite too many in terms of options they went by at this point. But Ruchit, let me come to you with regard to technicals. What's, in your view, really led to this kind of fall, and what should one expect going forward?
If you look at recently last 3.5 months, the IT sector has seen a one-way up move. If I look at the Nifty IT index, then at the start of June, the index was trading somewhere around 31,500. And right now, in spite of today's correction, we are still over 42,000. So it's just that the short-term momentum readings are overbought, and hence we are witnessing a corrective phase just before that event of US Fed interest rate. So I think as of now, it should be read just as a profit booking or a correction within an uptrend. We could see some more downside towards 41,000, 41,200 mark, but this does not seem to be any kind of trend reversal. So I think buy and dip approach should be kept for the IT names if one is looking from a bit medium-term perspective, but not at current levels. I would wait for some more dip towards 41,000 on the Nifty IT index, where the risk-reward ratio could become favorable again.
Right. Devinbhai, if I can come back to you, just with regard to the big event today, 25 versus 50, of course, the big question. But more than that, if one were to look beyond and one were to look at the impact of some of these rate cuts, as well as the possibilities of a soft landing or otherwise, how's the IT environment in your mind shaping up? Do you believe that there is likely to be, in case there isn't a soft landing also, can IT continue to do decently well like was expected at the end of Q1?
So I am a firm believer of, I think, the current change which is happening in our universe. And I believe that, I think, given the power of computing that we all are asking for, I believe that, I think, most of the Indian IT companies will be, I think, in a favorable positions going forward, because they have the ability to work out the solutions based on the use cases. So I'm not seeing a kind of a downside in the business. What I'm probably observing is that many companies who are not geared up to the requirement of the environment may probably, I think, end up having some of the smaller order books or some of the smaller growth in the business. But rest of the ones, I think, which we have been catering to the exclusive class of customers, like I have been mentioning about the engineering R&D space particularly, where I believe that the mid-tier IT companies are playing predominant role in providing the solutions to their customers. They would be relatively better off as far as, I think, their business intake is concerned, inflow is concerned, and so would be their financial performance thereafter. So maybe, I think, the premium valuation era is gone, but maybe, I think, we'll have to buy stocks when the market gives you corrected price opportunity at a given point of time.
All right. Okay. The other sector in focus is two-wheelers. Two-wheeler sales have consistently outperformed passenger and commercial vehicles in the last year. What's leading the outperformance? Puneet is joining us for more details. Yes, Puneet.
Well, thanks for that. So, it has consistently outperformed, as you rightly said, the four-wheeler industry. and going forward as well, we can see that it's going to drive the valuation of the whole auto sector completely. Now, when you look at, what's leading to this is, of course, the strong sales growth for the financial year 2025, starting April to August. We have seen roughly 8 to 13% growth from the likes of the legacy automakers, the Hero, Bajaj, as well as the TVS of the world. While Ola Electric has grown 66% in sales, it's still a very strong, growth, but it's coming at a very small base of about 1 lakh units sold last year. Now, specifically, when we move on to see the divergent view on the other side of the passenger vehicle makers, it's hardly any growth for the likes of Maruti as well as the likes of Tata Motors growing. Tata Motors actually reported a 3% fall in sales from April to the period of August, and only Mahindra and Mahindra has been one of the key outperformers here on the back of new launches. When you move forward and look at the returns generated by these two-wheeler companies in the last 1 month as well as the last 6 months as well, we can see that the sales growth has transferred into the stock price returns as well, especially in the last 1 month that we see the likes of Bajaj and Hero MotoCorp both outperforming the auto sector as a whole, driving the 16 to 20% return growth. Eicher Motors has been one of the most disappointing ones. With the volume growth also we've seen it's been lagging the other players, and that's reflected in the one as well as the returns. But what's surprising is the 6-month return has been decent around 29 odd %. But the leaders here, of course, are Bajaj Auto as well as TVS Motors, both driving the sales growth of the company. Now, we look at some of the factors, what's worked for the company in this particular time frame. And the first one's, of course, the volume-led growth across the key segments, which have been driven by new launches by the companies. Now, we've seen roughly around 10 to 12 launches by all two-wheeler makers, and we'll see how these are working out as well in transpiring to strong sales growth. And the other key factor was working is, the first signs of recovery in rural demand. Post Q1, the earnings conference call, both Hero as well as TVS management has said that the rural growth has been faster than urban, and this is the first time in 4 years that has happened. Strong rural growth has also grown faster, and that's also led to, newer models, especially in the 125cc segment that's worked. And that's kind of become the new entry-level segment, essentially driving the sales growth for all these automakers. Finally, the ICE as well as the EV scooter is a segment which has picked up both. And especially one of the key winners here is TVS Motors. They have the Jupiter, which has been, selling roughly 70,000 units per month, as well as the EV scooter is the iQube on the other side. That's been one of the key things to watch out for. But what to do and what's to look forward to going forward from this is, of course, the acceptance of the new launches. We've seen 12 launches as we spoke about in the last 5 months. Dispatches have just started in the last couple of months, so that's going to be one of the key things to watch out for. Another thing is the growth in the festive period. We've seen 17% growth in the first 5 months for these two-wheeler makers versus just about 6% for passenger vehicle makers. And going forward, it'll be important to see what happens in the festival period. Finally, a couple of other factors are, of course, the valuations. While they have moved up and given the returns of roughly about 43% for Bajaj, as we spoke in the last 6 months, they're still favorable and not quite as to say out of whack for most of these players. We can see that, for FY26 specifically, for the likes of TVS Motors is one of the most expensive because it is targeting both the 125cc as well as the scooter segment, while Bajaj and Eicher Motors as well as are trading roughly around the 27 to 30 times. And despite the strong performance by Hero MotoCorp in the share price specifically, it's still just trading at 20 times price to earnings for FY26. So overall, while the outperformance has come in the last 12 to 18 months on volumes as well as stock price, the valuations are still not, completely out of whack. And specifically one line for four-wheelers, they are trading mostly around the 20 to 25 times price to earnings. So that's still discounting the less volume growth that they have. So overall, we can see, in this particular chart that the buy calls are still there for the likes of TVS and Bajaj Auto, while, for someone like a Hero, also the highest with the 67% buy calls for the company. So really strong picture posted in the last 5 months. It'll be interesting to see what happens in the festive period. Back to you.
Right, thanks so much for that breakdown, Puneet. Devin Bhai, if I can come to you just with regard to the key point that I took away. Hero Moto has been a doubler over the last 12 months, still trading at just about 20 times. Any names that you like within this space, both from a value plus growth perspective?
Well, I think in order of preference, the Bajaj would always remain on the top. Hero would come. Hero and TVS can possibly come in second and third positions. My rationale is very clear. For Bajaj, I think the premiumization is the motto, wherein they are basically changing the fuel mix. and they are in turn in process, they are basically getting higher amount of realization on per vehicle basis, which is driving the profit margin. Similarly, their most profitable product, which is three-wheeler, that particular product is definitely, I think, a winner because they have succeeded with the electric three-wheeler, and that's where probably the higher amount of margins are being talked about. The electric vehicle, the two-wheeler per se, is slowly and gradually, I think, is creating buzz in the marketplace. And as I see, in next 6 months to 12 months, I think they are likely to come up with another segment of vehicles within the two-wheelers in electric vehicle space. So all in all put together, Bajaj is likely to replace significant amount of existing markets with its variety of products, with EV, with ICX, and with also the blended fuel which they have actually brought in. In my viewpoint, I think that is where I position this company ahead of others. Of course, it has moved up. It may probably have some price correction, but otherwise, I think this remains, I think, very clear growth leader as far as the space is concerned.
That's interesting you say that, Devin Bhai, because just look at the CLSA note on Bajaj today, where they've retained an underperform, set a target price of 7,000 rupees, which is a massive downside from where they are. And the concern that they see is basically cautious on the increasing competitive intensity in the premium motorcycle space. They're seeing growth moderation in the greater than 250cc segment, motorcycle segment, and saying it's growing slower than overall motorcycle industry, continued pressure in export markets. But just follow up, because you talked about Bajaj, and I'm sure you saw that note as well. Devin, you would still say in your rankings is Bajaj Auto on top? Or how would you look at Bajaj Auto, Hero, TVS?
See, as I explained, I think the kind of change this company is bringing is profound.
Okay.
And as a result of which, they are cornering the market share in the premium motorcycle is extremely profound. At the same time, I think you have that export market, which is significantly large portfolio of your business. And given the situation wherein the overall global environment becoming more clearer now, with the war-related situation, I think working in the direction of peace, I would think that I think the Bajaj would probably have the advantage with the premiumization of product. And that's where I would like to bet on it, even though it may be slightly expensive valuation. But whenever the industry is shifting, the shift is taking place in the platform, the technology, I believe that I think you have got a relatively higher advantage when you are positioned well. So that's the reason for which I think I would remain more confident about the Bajaj. Price may correct, I think I am not worried about it. But the business outlook for the company is remaining more and more clearer to me as I see it. The new models which they are talking about, which we are bringing out, they are really, really good models. I think they are coming up.
Okay. So Devin Choksi, bullish on Bajaj. Just, I know we have to let you go, Devin, but I have to ask you about BSE, because as I'm seeing it, that stock is again 18% up. 17.5% up. And at the start of the show, Harsh put together a bull and bear case. But is any of it making sense to you? How are you looking at the BSE run-up?
So one point, I think the financial market intermediaries, they are not too many available in the listed marketplace. That is the first point. So there is always going to be a shortage of these people as far as I think the market is concerned. And there is always going to be the higher amount of requirement to add these people into the portfolio of the investor. Also because of the fact that the financialization of investment is happening at a very rapid pace. Financialization of assets happening at a very rapid pace. And going forward from $4 trillion economy to $12 trillion economy by 2035, if you are talking about 3 times growth in the economy, and if you are talking about similar 3 times growth in the market capitalization, the exchange business, the depository business, the custodian businesses, I think those are some of the businesses which are likely to probably have a natural advantage of having higher volume. And to my mind, I think as the government is talking about, I think bringing the insurance business on the platform of the stock exchange for effective distribution, to me, I think that could also become, I think, a very large component of the business provided to the exchanges. So I would remain distinctly confident about these companies, and probably the valuation wise, I think they may eventually go up. I think today the market is in a relatively good mood for which I think the valuations are scaling up. But otherwise, I think gradually they will go up in the journey of next 10 years.
Okay, thank you so much, Devin Bhai, for joining us today. It's been, as always, a pleasure having you here. We'll let you go on that one. Thank you, sir. But let's stick with auto, because Devin Bhai spoke about Bajaj Auto. It's been It's up 127% over the last 1 year. But one of the stocks which has done phenomenally well, at least this week, is Samvardhana Motherson. Puneet is with us. Focus on, of course, the QIP, loan repayments. Puneet, what's in store?
Well, definitely, it's they have launched their QIP and they've mentioned that the floor price is roughly around 188 rupees. Now, the last 1 year stock performance has been phenomenal for the company, and that's also one of the key reasons that the timing of this QIP is very essential. Now, it's come at a good time for the company, and according to Bloomberg, they are willing to offer roughly about 33 crore shares in this particular QIP, which translates to about 6,400 odd crores using the floor price of the company. Now, there could be two potential reasons for this particular QIP is what we gather. One could be to fund further acquisitions, but the likeliness of this outcome is quite limited because they have done 5 acquisitions in the last 1 year itself. 2 of them were major. One was Yachio Industries for roughly around 960 odd crores. The other was Lumen Group, which was around for 520 odd crores. So they are integrating these acquisitions, and because of that, they've taken a lot of debt in the last 12 to 18 months. Because of that, the net debt to equity ratio has gone to roughly net debt to EBITDA ratio has gone to about 1.7 times, and they are looking to reduce that to 1 time. That's what they mentioned after the first quarter earnings conference call as well. Currently, the net debt amount is roughly around 16,000 odd crores. So they would essentially want to pair some debt with this QIP fundraise that they are looking at, and that would also meet the target that they mentioned. So the stock has been reacting positively over the last couple of days based on this floor price announcement that's come. But we'll still see the exact outcome, of the exact quantum that they are looking to raise from this particular QIP. Back to you.
Okay, thank you for that, Puneet. Samvardhana in focus. The other stock in focus is SpiceJet. And a bit of a pain point there for SpiceJet. Stock is down about 6%. Now, their filings have shown statutory dues of over 700 crores. The company has now responded saying that, this is something that they have put in the public domain, but it's nevertheless hurting the sentiment today. Aditya is joining us with more. Aditya, give us the details of that 700 crore statutory dues. But among that, what really caught my eye is the 135 crore figure that they owe in PF.
Absolutely right. So basically, SpiceJet troubles are nowhere close to the end now. Because now see, according to the latest filing that SpiceJet has put out on the exchanges, there is some data that I want to highlight here. The statutory dues in total are about 793 crores, out of which total unpaid dues are of 426 crore and 336 odd crore is the disputed amount. So apart from this, the dues include TDS of around 219 crores and GST of 71.5 crore. But one number which is to be highlighted here is 135.5 crores of PF that is pending. That this is the employee money, basically the money of employees that has not been paid yet by the SpiceJet. This is one important metric. So I will also read out what a company has written in that particular exchange filing. There have been delays and deferrals in depositing and payment of statutory dues by the company. Any delay in deposit of such statutory dues may lead to penalties or interest for delayed period and other adverse action by the concerned authorities. So basically it is very clear that concerned authorities in these dues may also take an action against the airline. So QIP is being raised, 3,000 crore figure has been put forth for the QIP, which includes 1,500 crore green shoe option. But now the question here arises is that this entire amount which the company would raise from this QIP would it be sufficient for getting the new fleet in? They have sent their employees on a furlough of 3 months, so they also have to get those employees back, and now this new thing has risen. So all in all, there is a lot of turbulence happening for SpiceJet.
Okay, and of course you saw the statement from the company as well. SpiceJet has been one of those seesawing kind of stories that's really difficult to track. Now 7% down in today's trade because of the statutory filings, but the QIP was seen definitely as a positive. Ruchit, as we're going into closing strategies, let's come to you on the BTST call.
So I'd recommend going long on Nestle from a BTST perspective. So relatively, I would like to recommend something where which is a low beta name considering the big event that lies ahead. So even if we see any kind of volatility, I think the Nestle would be one good pick where the stock is on the verge of a consolidation breakout. And the risk-reward ratio is also favorable because the stock has not seen any kind of run-up recently. So at current levels, one can go long with stop loss below 2,540, expecting targets around 2,650 to 2,670.
Okay. Varsha is also meanwhile joining us. Remember, there's a whole host of cabinet announcements that have been made, including a fairly significant amount announced for fertilizer subsidies. You're already seeing some of the fertilizer stocks running. Let's pull some of those up. RCF, Deepak Nitrite, FACT. Those fertilizer stocks are completely zooming after that cabinet allocation. What are the details, Varsha?
Well, Tamanna, all the fertilizers company, if you see past quarters, they were facing issues when it comes to their financial numbers as well, because the raw material for them was increasing, but there was no subsidy provided by the government or low subsidy provided by the government. But now, Cabinet has approved subsidy under NBS at rupees 24,475 crore, and the government subsidizes fertilizer price so that farmers do not bear the burden of market movements. Now, under nutrient-based subsidy scheme, NPK fertilizers are made available at farmers at subsidized rate. Now this aims to reduce financial burden for the farmers. Now all the fertilizer companies will be gaining. You are seeing that Deepak Fertilizers, then National Fertilizers, Chambal Fertilizers, then all Paradeep Phosphates. All these companies will be gaining because the raw material prices though are increasing, but the subsidies are also increasing. So the margins for these companies will improve going forward.
All right, so some margin improvement expected on the back of those subsidies coming through, and you can see some stocks fly away a little bit on the back of that. But let's ask quickly take stock. Ruchit, if you can give us your views with regard to some of these Deepak Fert, Coromandel. You're seeing good traction while we are very close to close on some of these counters.
I think all the stocks within the sectors have seen a good volumes of late, especially in today's trading session. But if I look in terms of risk-reward ratio, then RCF is one stock where the prices have recently seen a correction from the swing high of about 240 to below 200 now. So the risk-reward ratio is quite favorable as the stock is also hovering around its 100-day moving average support. So if one has to take any fresh positions within the fertilizer space, then I think one would be the RCF, where at current levels also one can go along with stop loss below 182 for a potential up move towards 210, 215 again. And Chambal Fertilizer is another name where we have seen a decent consolidation in last one and a half month. But one thing to note down is that in this entire consolidation phase, we have not seen any kind of volume-based selling. So usually whenever the prices go up with good volumes and on corrections if the volumes are low, then those are good signs from a midterm perspective. The only thing is that the breakout has not yet been done from that consolidation, which is above 530. So one can keep this on watch list. Any breakout maybe next one or two trading sessions above 530, one can then create fresh longs in Chambal with stop below 510 for potential targets around 570.
Okay, thank you so much for that, Ruchit. Fertilizers in focus. Earlier in the day, you had some railway companies in focus. The capex flow is really coming back into vogue as we go into market close. Less than a minute and a half. Let's see where the Nifty is now settling in. The cut is getting slightly deeper, about 70 points odd lower on the Nifty. The Bank Nifty, though, is raring to go, nearly 1% up. Let's just pull up the line chart for the Bank Nifty before we close off for the day's trade, because really the entire story, frankly, is on the Bank Nifty and doing fabulously. Come off its highs, but considering the kind of pressure we're seeing, sectoral rotation is very clear on the Bank Nifty. I want to pull up the Nifty IT just for a second and look at how bad it has become for the Nifty IT, and clearly the cuts are deep, 3% down on the Nifty IT index. Let's pull up the heat map as we go into the last odd minute of closing or so, and it gets worse for TCS. HCL, unfortunately, is joining the pity party, as is Infosys, Tech Mahindra and Wipro. Nothing much has changed here, more red than green. The advanced decline ratio will also show you that, Harsh, because even the broader markets are not faring any better.
Yeah, breadth extremely weak, Tamanna, in trade today, even as we come closer to close. It's improved a wee bit, but very, very marginally in terms of the breadth. Let's pull up the midcap 150, see where that one is settling in at. There you go. It's around 0.8 odd% lower, just off the day's lows.
So even worse than the Nifty. Broader markets have fared worse.
Yes, broader markets have fared worse, and the Nifty small cap relatively better than the mid cap, 0.5% odd. But again, just off the day's lows. Will be an interesting day and rest of the week, Tamanna, especially given the fact that there's a macro event, a huge macro event in focus.
Yeah.
Let's pull up the BSE 500 just to kind of cap this off. And there you go. So graphite.
Graphite, you've been tracking that. What's
Yes.
the reason why graphite has been running?
So the largest graphite player in the world has hiked prices by 20%, and that's likely the move on the back of that. But a lot of IT seen here. Blue Dart cool off after yesterday's rally. So most of it being IT, of course, Sona BLW being one of those, and JM Financial being the other one, which is standing out. Yeah, but on the flip side, I again see another Bajaj Group company there, Maharashtra Scooters. We've regularly seen that feature, but outside of that, even Bajaj Finance has done fairly well in trade today.
Bajaj Finance has done well as well. You've seen fertilizer stock spike towards the end of close, and perhaps that continues tomorrow as well. But a bit of a reset for tomorrow in the sense, a lot depending on what you see at midnight tonight. 11:30 p.m. onwards, you will have coverage on NDTV Profit of what Fed Chief Jerome Powell says. Will it be a 25 basis point cut or a 50 basis point cut? In either scenario, what should you do? You need to come back here tomorrow morning on India Market Open. But for now, from Harsh, me and the entire team, thank you so much for watching.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है, आज भी वो physical है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया। हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is
Hello and welcome back to NDTV Profit. I am Mika Barve and you're watching Ask Profit, a show where we get all your stock related queries answered from our fundamental as well as technical guests. Now, if you have any queries, do send us your queries on the numbers that are flashing on your screen below. But let's just take a quick look at how markets are faring right now. Well, we do have the Nifty 50, which is in the green, up about 0.16% in trade right now. When you talk about the counters that are doing well on the benchmark, well, we have Manba Finance, which is the top gainer today. It's up up over 3% in trade today, as well as some strength coming in Bajaj Finserv and HDFC Bank. The counters that aren't doing so well, tech, it is the IT pack. We have Tech Mahindra, TCS, Wipro and Infosys all under pressure, and we'll be addressing this in just a minute. When you talk about the broader markets, the benchmarks are outperforming the broader markets. The Nifty mid-cap is actually the top underperformer today. It's down about 0.4%. You know, the counters that are leading to this negative performance, we have again the IT counters, Emphasis, Oracle Finance down about 5% in trade today. Persistent Systems and L&T also seeing cuts of around 3 to 4%. When you talk about, you know, some of the counters that are gaining on the Nifty Midcap 50, we have BSC, which is the top gainer on the index right now. It's up over 8% in trade today, as well as some strength in some quick service counters like Devyani International is up 4.5% right now. But, you know, let's look at the sectoral indices. While we do have Nifty Finance and the Nifty Banking sectors that are the top gainers today, the Nifty Finance Index up about 1.3%. The top loser is the Nifty IT, and the index has seen a cut over 3% in trade today, with all constituents in the red right now. When you talk about the top loser, it's Emphasis and Persistent Systems seeing cuts of 4 to 5%. And we have Rucha joining us to give us more of an outlook on why the IT sector is under pressure today.
Right, so Nifty IT is falling in trade today, and this is largely on the back of one news that came out in Accenture, wherein Accenture is set to delay its staff promotion from June to December. Now, this is the information according to Bloomberg, and Bloomberg reports that Accenture had told its employees in an internal email that they are also considering to permanently shift the promotion cycle from June to December. Now, I'll tell you why will this be happening. Now, clients generally set their budget in December for the coming up calendar year. So if the December cycle comes into the picture with respect to employee promotion, the company gets better clarity with respect to how clients are looking onto their budgets, and then the company can decide onto their expenditure like employees, ESOP costs, etc. So this might be the reason why Accenture is considering to get a better clarity on demand. Now, talking about IT as a whole, well, Citi had come out with a note on Accenture per se, the global team, when it had mentioned that surveys point to relative demand stability. Now, mind you that over the last couple of quarters, demand was into pressure because of different macro uncertainties like war, interest rate, etc. But now the surveys conducted by Citi indicates that there is relative demand stability, if not a dip in demand. Also, clients are, however, cautiously optimistic towards CY25 budget, which means that CY25, that is calendar year 25, will likely be better than calendar year 24. But different events like the federal meeting which we have and the election cycle which is coming up this year could also affect clients' budget, and hence the budget could also affect how much they spend on IT, and hence reflect in the revenue for IT companies. Now, pressure also continues to be on smaller discretionary deals. Now, discretionary happens when, you know, clients have to cut out on their budget to accommodate different expenditure as well. So pressure on smaller deals although continues, and budget reprioritization is also happening by clients. But comparatively, like if we stand right now and if we compare IT's outlook back 4 quarters back, we can see that there is relatively better green shoots which even different companies had mentioned in the first quarter earnings.
Yes. Thank you, Rucha, for giving us that outlook. We're now joined by our guest for today, and that's Vaishali Parekh, who's the Vice President of Technical Research at Prabhudas Leeladhar, as well as Rajesh Agrawal, who is the HOR at AUM Capital. Welcome to the show. Rajesh, I'll first come to you. You know, IT under pressure. What are your views? Which counters do still have strength investors want to buy in today?
Good morning, Maika. Good morning, Vaishali. IT is under pressure today because people are waiting for some outcome of the Fed, which is due to come on 18th, and not to forget that what Asset Center had postponed their promotions and all. That's giving a somewhat bleak picture about the IT industry as a whole. And in domestic markets, we must not forget that in the last 1 week or so, IT stocks have given good returns. So some profit booking is creeping up. Otherwise, we are not that negative on IT as a whole. If somebody is willing to invest for a medium-term horizon, by medium-term I mean at least 6 to 9 months, because one, the numbers have been pretty good in the first quarter. Balance sheets are strong. Order inflows are better than expected. Particularly companies which are in Gen AI, cloud and all are doing well. And not to forget that once the rate cut cycle is initiated, we believe that those companies which have good exposure to US and Europe markets would start getting good new orders from discretionary spending, especially from the BFSI segment. Hence, we believe that this fall is a kind of opportunity for long-term investors to accumulate. Whereas we would recommend in the large cap, we would recommend Infosys or a TCS. In the mid cap, we would go with Persistent System, LTI Mindtree, or Intellic Design.
So much, Rajesh, for giving us your view. We'll take this first viewer query for today, and this is from Deepak Patil, who is currently invested in Ircor International, and he's bought his stocks at a rate of 208. He's bought 286 shares at 600 shares at a price of 286, and he wants the outlook for the same. Vaishali, I'll come up to you first. How do the charts of Ircon International look to you?
Very good morning, Rajesh and Mehta. Yes, Ircon, we were tracking it just yesterday, and I think the stock has corrected quite a bit, and it has come into the oversold zone. So I think we have all the scope of this stock. So now I would say 220 would act as a support, and we may see a bounce back. But if 220 levels break, then the stock is really showing weakness.
Thank you, Vaishali, for giving us your insight. The next query we have is on Tata Steel. Now, the Narayan K from Chennai is currently holding shares of Tata Steel at a price of 148.68 a piece, and he's asking for the near-term outlook. He's asking if the upward momentum is expected in the near future. Rajesh, I'll come up to you. I know the steel sector, especially prices, have been under pressure. What's your outlook for the near-term future for Tata Steel?
See, for near-term future, it's very difficult to say because in metal pack, a lot depends on what China tends to do. And with some positive signals coming from Chinese economy that they are going to go for some monetary easing, I think metal stocks are going to gain. But if we look at our domestic side, the best part for steel sector is the iron ore prices is quoting below $90 and that's a very big positive for the entire steel industry as such because they're one of the major raw materials iron ore. And secondly, when we look at the kind of infrastructure development and the focus of government on real estate, CapEx and all these things, I think steel demand is going to go up. So with demand moving up, I think these companies are going to do well, not only Tata Steel, but others in this pack. One have to keep a medium to long-term view for having some meaningful gain. For short-term, I think 160 would be a decent target in the next 15 to 20 days.
160 target for the next 15 to 20 days, but a better outlook from a medium to long-term perspective. The next query is from Rao from Bangalore. He is currently holding 1,000 Vatek Wabag shares at a price of 1,300. Now he's open to hold it for a 2 to 3 month horizon, but he's asking for a near-term as well as a mid-term target. Vaishali, I'll come to you. How does Vatek Wabag look on the charts? Any specific targets to keep in mind?
So I would say actually, yes, the long-term chart is also positive, and even if I'm seeing the daily chart, it is in an uptrend, but right now it is consolidating. So I would say continue holding because once it moves past 1420 levels decisively, this could be going towards perhaps even 1600 levels. So my view is positive, and the near-term support for this stock lies at 1250. So that is how one can take the strategy, can add more or continue holding with the trailing stop loss to look for a target of 1600.
Thank you so much, Vaishali, for giving us that view. The next query is from Shreyas from Bangalore. Now, he's holding all cargo logistics shares at a price of 71.50, and he bought this for a swing trading session. He's asking if he should hold or exit. Vaishali, I'll come to you again. How does all cargo logistics look on the chart?
So there is really actually nothing much happening, but when I'm looking at the daily chart, it's just in the process of making the higher bottom. So if the stock is showing clarity of bottoming out at 66 levels and showing a swing upward towards 72, 73, I guess it's a positive view. And the actual momentum would begin only about 75 levels because that is what will make it go into a trend and then perhaps go towards 85 to 90 levels. So 66, 65 should act as a support, and above 74, there will be a clarity for an upward trend to begin.
Got it. More clarity about the 74 level. The next query is from Anvesh, who's from Andhra Pradesh, and he's requesting a suggestion of whether he could enter Bajaj Housing Finance at this level, or should he wait? And he's suggesting for good value to enter trade. Rajesh, I'll come to you. You know, stock has just listed. It's had a stellar run so far. Is it a good investment for someone who didn't get the IPO allocation?
See, you said it right. It was a stellar run so far. Got good listing, more than 100%. I would say even more than 140-50%, and that's a high price to pay for a company because in a housing finance sector as such, because it's trading at a P of around 60-70 odd, price to book of 10-11, whereas you're getting other companies which is like LIC Housing Finance at price to earning of 10 and price to book of around 1. So you see the kind of valuation differences there. Yes, I agree that Bajaj Housing Finance has done very well in the last 6 years or so, 39% CAGR growth, a AUM book of 97,000 odd crore belonging to a good family, good pedigree. But still somewhere I think valuations are stretched. It's no point having a FOMO kind of sentiment and chasing Bajaj loans. Better to, if you want to invest in housing finance company, I think there are better options. Why not go for LIC Housing Finance?
Got it, Rajesh. The next query is for Adani Energy Solutions. Now, the viewers holding the shares at a price of 1,167 a piece, and he's holding 50 shares right now for the past 4-5 months. Now, presently, the stock is hovering around 988 is what the viewers have said. He's asking, what the next term view should be. Vaishali, I'll come to you with this. How does Adani Energy Solutions look on the chart?
Yes, so there is no trend right now. It's just consolidating. So let's wait and watch. If the stock goes above 1,020, I guess it will gain some conviction for a further upside. So till then, it is just consolidating and nothing much happening. Even the indicators are showing a sideways move. So no view right now, but 900 levels should not break. That should be the discipline that one needs to follow.
Okay, thank you. Got it, Vaishali. Just a disclaimer for viewers, NDTV Profit is a subsidiary of AMG Media Networks Limited, which is a Adani Group company. Well, let's now move on to the next query for today, which is for Grindal Norton, which the viewers holding at a share price of 2,100 a piece, and this is from Suresh Babu, who is from Hyderabad. Now, he's buying since the past 3 years, and the average price in his portfolio is currently at 2,100. And he's asking for recent downtrend, reasons for the recent downtrend, and he's recommending whether he should add more to his position or hold a book profit. Rajesh, I'll come to you. Any views on Grindal Norton?
See, it's a very strong company, a strong balance sheet, doing very well in its field, had been given consistent return to the investors from a very long period of time. The only problem with this stock is the low volume which it has. For long-term investors, I think it's a hold from our side. And if by any chance it goes around 2,000 odd levels, then it's a add.
Got it. The next query is on Hindustan Zinc. The viewers, this is from Ramu from Tirupati, Andhra Pradesh, and he's currently holding 100 shares of Hindustan Zinc at an average price of 808, and he's currently facing a loss of 32,000, and he's asking what he should do next. Rajesh, I'll come to you next. Again, views on Hindustan Zinc?
Continue to hold, I would say. As we talked some time back, metals are going to do well. Not only steel, but zinc is also going to do well. It's one of the major raw materials used in different type of industries. They got good reserves, balance sheet is strong. The only problem which we are witnessing right now in the correction is just because of the kind of run-up it witnessed just because before the dividend announcement and all. Continue to hold.
Hold for Hindustan Zinc. The next query is from Kanak Khatari, who's from Ahmedabad, and he's asking about DCW, where he's currently holding 5,000 shares at a price of 57.85, and he's almost making a profit of 2 lakhs currently, and he's asking whether he should hold his position or book his profits. Vaishali, I'll come to you. How does DCW look on the charts?
So I would say the trend is very strong. It is in fact ready for further up move. So keep a trailing stop loss since he's already sitting on a good profit. 90 should act as a trailing stop loss. And the way the chartical pattern is unfolding right now, I would say that yes, it's ready for a target of 110. So that would be my first target to look for.
Got it. The next query is from It's for Wellspin Living now. The person's bought 10,000 shares at a price of 160. Now his position, the share price did go up to 210 and then declined to 175, and the current market price is 183. And the viewer is asking if he could hold this for 1-2 years and looking for the future growth guidance. And this is from Rahul Sharma from Chandigarh. He's currently making a profit of 2 lakhs. Rajesh, I'll come to you. Outlook on Wellspin Living?
See, the quantity is very huge, I would say. You should keep a strict stop loss at least of your buy price to not to turn into losses, and continue with the company. For a longer term horizon, I think the prospects are very good, doing very well. Recently, they had a management commentary which said they are expanding in a big way in the European markets also. Just continue to hold.
Hold for Wellspin Living. Then just a quick reminder for viewers, when you do send in your queries to us, do send your name and location, so it'll be quicker for you to identify when you later stream the show. The next query is from Ram Mohan, and he's holding 50 shares of Dixon at a price of 3,445. He's currently making a profit of 5 lakhs, and he's asking whether he should hold his position or exit it. Vaishali, I'll come up to you. Do you think Dixon has more upside to go to? What do the charts say?
So, well, so far the way market is going, it's an endless upward move. I would say partial profit booking should not be ruled out, so that once there is a dip, he gets a chance to again re-enter. Else, keep a trailing stop loss and continue with the ride. It can go towards 14,400 to 500.
Rajesh, I'll come to you with this too as well. Fundamental outlook on Dixon Technologies?
It is a strong company, gainer of PLI scheme. They have got into tie-ups with certain companies like Asus and all for manufacturing. So that can be a good long-term story. But at this point of time, considering the valuation trading at 3-digit PE figures, I think the valuation are overstretched. If not full, I would suggest partial profit booking.
Okay, partial profit booking for Dixon Technologies. The next query is from Jigar from Ahmedabad, and it's regarding HDFC Bank, and he's currently holding 310 shares at a price of 1,610, and he's asking for the long-term outlook. Rajesh, I'll come to you again. Views on HDFC Bank as well as the private banking space?
See, private banking space are doing well. I think some of them are on a strong valuation to give good long-term returns. For example, Axis Bank or a Kotak or HDFC are good value picks at this point of time. But as far as HDFC Bank is concerned, we have been very bullish and have been recommending on your channel to several times. I think it's still a buy at this point of time. It's one of the 10 largest banks across the world after the merger, going to report around 80,000 crores of profit next year. And have been stable. The only problem is credit growth, which I think once the interest rate cut cycle starts happening, it's going to do well. And not to forget the kind of subsidiaries this bank has, like HDFC Securities and others. They are also doing well. The valuation are extremely cheap. One should buy at this price for a medium-term horizon by maybe 12 to 18 months. One can give good returns.
Got it, Rajesh. The next is another private bank, and this query is from Shivarudai from Mysore, Karnataka. Now, he's bought 13,000 shares of IDFC First Bank at a price of 58.6 rupees in November 2022. He's currently sitting on a profit of 1.8 lakhs, and he's seen not much of an upward trend, and he's asking whether he should hold or exit some of his position. Vaishali, I'll come to you first. How does IDFC First Bank look on the charts?
So I would say technically it is very well placed. If it moves, it can go towards 83, 88 levels also. But it's been quite a laggard. So I mean, right now when we are focusing on all frontline banks, like to name the banks, ICICI, Axis, they have already got into a very good momentum. So if time is not the factor, then I would say hold. But otherwise, these are much better stocks to look forward.
Got it. The next query we have is from Amit Murkate from Mumbai. Now he's asking whether he should buy CDSL due to the today, or wait for some correction or a further dip in the counter. And he's asking what a target would be for a 1 year.
promise that has been present in the BJP manifesto since decades. Even before this election, there was a very clear promise that one nation, one poll would be implemented in this term. That's the third term of the Modi government. Well, the first step of that has been taken. In a historic decision, the cabinet has given its nod to one nation, one election. They have essentially accepted the proposal of the Kovind committee. Former President Ramnath Kovind was heading a high-level committee on the feasibility of one nation, one poll. This report has now been accepted. Now, why is this important? One nation, one poll for long has been a contentious issue. It's a promise of the BJP and the ruling party. And the reason that they want to bring in simultaneous polls or one nation, one poll is that they say it would ease the burden on the exchequer. After all, having the country in constant election mode costs money. It also ensures that governments and parties are more focused on wooing voters rather than governance and doing their job. That's at least the argument for simultaneous polls. What does it essentially mean? It means that elections for the central government, the state government, and eventually even for local bodies will all take place at the same time. Is this even possible? What are the kind of constitutional amendments that are required to do it? Why is the primary opposition party against it? And what does that mean for us as citizens? Those are some of the things that we're going to look at over the next half hour in this special show. But before we move forward, let's first listen in to what Union Minister Ashwini Vaishnav said at the cabinet briefing while announcing that the committee report on one nation one poll has been accepted.
पार्लियामेंट्री कमेटी ने भी 2015 में अपनी 79th रिपोर्ट में कहा था गवर्नमेंट को कि सजेस्ट मेथड्स फॉर साइमल्टेनियस इलेक्शंस इन 2 phases. इसीलिए हाई लेवल कमेटी गठित की गई थी अंडर द चेयरमैनशिप ऑफ श्री रामनाथ कोविंद जी, द फॉर्मर प्रेसिडेंट ऑफ इंडिया, एंड दैट कमेटी एक्सटेंसिवली कंसल्टेड अ ब्रॉड स्पेक्ट्रम ऑफ स्टेक होल्डर्स including political parties, judges, constitutional experts, large number of experts from various fields. इन सब के extensive consultation के बाद में एक रिपोर्ट सबमिट की थी. वो रिपोर्ट आपको ऑनलाइन अवेलेबल है. ये वेबसाइट आपके सामने रखा हुआ है और आप यहाँ से ऑफिशियल वेबसाइट से डाउनलोड करना. साइबर सिक्योरिटी इज मोर इम्पोर्टेंट, राइट? सो एक्सटेंसिव फीडबैक से आया था कि देयर इज अ वाइड स्प्रेड सपोर्ट फॉर साइमल्टेनियस इलेक्शंस इन द कंट्री. देयर इज अ वाइड स्प्रेड सपोर्ट फॉर साइमल्टेनियस इलेक्शंस इन द कंट्री. इसीलिए एनडीए सरकार की कैबिनेट ने आज सर्वसम्मति से इन रिकमेंडेशंस को एक्सेप्ट किया और इसका इम्प्लीमेंटेशन 2 phases में होगा जैसा कि कमेटी के रिकमेंडेशंस में है. फर्स्ट फेज में लोकसभा और असेंबलीज के इलेक्शंस को साइमल्टेनियस कराने का प्रयास होगा और उसके सेकंड फेज में लोकल बॉडी इलेक्शन से जो है ग्राम पंचायत, जिला पंचायत, ब्लॉक में पंचायत समिति और जितने भी अर्बन लोकल बॉडीज हैं, चाहे म्यूनिसिपैलिटीज हो, चाहे म्यूनिसिपल कमिटीज हो, चाहे म्यूनिसिपल कॉरपोरेशन हो, उन सब के लोकल बॉडी इलेक्शंस को विद इन 100 days ऑफ जनरल इलेक्शंस में करवाना, जिससे कि एक बार में सारे इलेक्शन का प्रोसेस कंप्लीट हो और फिर 5 साल तक सब के सब मेहनत करके देश के निर्माण में लगे.
Now remember, this is something that has been going on since a while. The bid or the argument for a one nation, one poll. And it's not going to be easy. For one, the 1951 Representation of People Act will be amended. The government will need a 2/3 majority in parliament to actually pass the bill. The proposal must be passed by 50% of states. 5 more articles of the constitution will have to be amended as well. So you have a lot of changes which will come. One of the big questions which also comes in, of course, is if you have a start date for one nation, one poll, for example, if it's 2029, what happens to states which have not completed their 5-year term? Because remember, it's a fresh start. So What happens in that case? Will there be legal challenges? What about the rights of those voters? So much to unpack. Let me start by speaking with Sajjan Kumar and Tejas Mehta, both political analysts who are joining us on the show. Welcome to both of you, and great to have you on NDTV Profit. Tejas, hi. Let me start with your view. I mean, just in terms of moving front foot on one nation, one poll, very clear messaging there from the BJP. And of course, then it comes down to brass tacks and how they will actually implement it.
I think I'm completely all for the idea behind this, because I personally feel the benefits far outweigh all the apprehensions that possibly not just the opposition, but many others who are apolitical personalities in this nation who also have, that they want to have a system where democracy, the principles of democracy are continued, and also we have a free and fair election. I think we all do know about the positives. We save a lot of money, we save a lot of time, we save a lot of officers not being posted in different parts of the country right through the 5 years. And of course, we don't have political tamasha every now and then whenever elections take place. But they also are apprehensions, and one of them, of course, has been that this could really overshadow political issues which are local and are more important in state elections. And when you have a Lok Sabha and state assembly elections together, the assembly elections could get completely disappear, especially when you have a towering personality like Prime Minister Narendra Modi. Though I do think this has not really been proved right. We have seen, for example, in Odisha, where at the same time simultaneous election took place in this year itself. The BJP did well, in both state and Lok Sabha elections, but they did better than what they expected in the assembly elections, where they now have a government too. In the past, we have seen completely opposite happen, where the Biju Patnaik government, the Naveen Patnaik government really swept the elections the last time. So I think the voter now is well aware that the Lok Sabha election and the state assembly election is different. There are different issues, different personalities at play, and therefore they think and vote differently. There could be, of course, a minority, a small percentage who could be overwhelmed by a national election which could take place, but that's life, that happens. I think in essence the Indian voter in that sense has matured. The second issue which really is brought up by the opposition is that this is not democracy. Now I really question that, because what do you connect democracy with? Is it simply repeated elections? Is that a sign of having democracy? We have elections so that we can be governed, we can be ruled by a certain set of people. Whichever party wins, that party goes ahead and rules us. That is what is the objective of democracy. It is not to have repeated elections where you weigh down and you literally tire people.
You've laid down, Tejas, Tejas, you've laid down the argument for the question. Okay, so there are two parts. One is whether it's a good idea or not to really uphold the rights of Indian voters. The second is how will you actually do it? So let me come to Sajjan Kumar on this question. What is your view, Sajjan, in terms of whether it really works to the right of voters? I mean, the counter argument could be that if you have more and more elections, your netas are always answerable. They don't have a 5-year hiatus, a 5-year vacation period between elections where they don't have to listen to you, because if not in one election, they'll have to answer in the next one.
Yeah, precisely, but that's a very romanticized version to justify and rationalize the politics of parochialism, wherein multiple elections in different regions, suiting different political parties and multiple leadership, that suits. But let's take the frame. One nation, one election is about the concurrent election, which was true about India until the 4th Lok Sabha election, that is 1967. Thereafter, ideally, the 5th general election should have happened in 1972, but given the political incentive that Ms. Indira Gandhi had, she preponed the 5th Lok Sabha election by 1 year, and thereafter 86% of the elections, which used to be simultaneous, that is, assembly elections used to be along with the Lok Sabha election, got decentered. And thereafter, it was an artificial decentering of the assembly and the Lok Sabha election. It is not a natural culmination. This is one.
having said that, Sajjan, the reason it also happened is, and the reason you then broke away from simultaneous elections is because governments kept falling. Then you had new cycles for state governments, and that's not going to change. Are you saying with simultaneous polls that's going to change?
It's going to change. Let's take the debate that elections should happen simultaneously weighs in favor that our public policy, which should be transformative, our leadership and the government, which should invest in another 5 years on governance, they make the very public policy ad hocish, keeping the next election cycle in mind. And India is an election-bound state.
I understand that, Sajjan, but that's not what I'm asking. I understand that, but that's not what I'm asking. I'm saying that is it feasible to have simultaneous elections if you have state governments that keep falling? Tejas, I'll come to you on this. Are you saying that we are going to stop seeing party hopping? Breakaway governments?
No.
Okay, one second. Let me just get Tejas's view and then I'll come to you. Yes, Tejas.
Well, just to answer your question on what happens if a government falls during this thing, I think, in fact, when the report came out a few months back, I had gone through the entire report, and what the former president had suggested and his team is that if it's fallen in the first year, you choose either another, what generally always happens, the opposition or somebody led by some other party, you have another formation which comes up, they claim stake, and they will continue up to the next elections with Lok Sabha elections which take place. So it could be 4 years, 3 years, 2 years, 1 year, whatever it is, but it is only until the next cycle. Yes, this changes this 5 years thing, but that happened, for example, in Maharashtra just now, where we have had 3 to 4 governments in the last 5 years. So, I mean, it's happening in any case. So now what they are trying to do is try and ensure that we don't have repeated elections, and therefore...
But Tejas, that is so 1 minute. Doesn't the committee report suggest that if you have a hung assembly, you have a re-election? Or if you have a breakaway faction, no confidence motion, whatever it may be, you have a re-election. Doesn't that defeat the purpose of reducing the burden on the exchequer? Then you're just having more and more elections which are as expensive. I'm just trying to understand how feasible this is in view of what current Indian political reality is. Of course, theoretically, you should spend less money. Voters shouldn't have to go out again and again. Government policy should not be about wooing voters depending on the election cycle. But I'm talking about practical implementation, Tejas.
Well, there are two things here. One is about saving money, and the other is about ensuring that the 5 years which are given to any government are spent in governance and not in the political hue and cry and constant shouting that we have currently in the current system. Now, if the other is served when it comes to money, and in the hypothetical situation there is a hung parliament and there are no other formations really possible, and fresh elections is the only way out, so be it. That's the price you pay to ensure that a new government is formed. But the question is, how often does that really happen now? I mean, it doesn't really happen. You have some form of formation coming because actually nobody wants to have another election. So this scenario of a fresh election, just let's think of it when it did last happen. I think perhaps in Delhi when you had Arvind Kejriwal, resign. I can't remember it happening repeatedly in the last decade or so also. So I think these are scenarios we'll have to take care of.
Maharashtra, please let's look at Maharashtra. Every state
fresh elections.
No, so that's what I'm saying.
Governments are coming, not fresh elections.
But in this case, if you have simultaneous polls, you will have to hold fresh elections. What will you do for the remainder of the term? Sajjan Kumar, that's my question, right? It's you back to square one, isn't it? Because the nature of Indian politics is not going to change overnight, right? Where everyone starts behaving themselves.
See, we have to quantify it. We have to quantify the frequency because there would be less incentive for the politicians and the political parties to go for a midterm poll. Because once suppose the 3.5 year of party has completed, and suppose you bring no confidence motion, whatever be the case, party hopping, defection, etc. But then also the election when it's going to be for another remainder of 1.5 year or 2 years, certainly it will act as a disincentive. So yes, there will be some sort of a remnant of decentered elections, non-simultaneous election, but nevertheless, you see, the larger incentive slowly would be to complete the tenure. Remember, during the 1990s when there were a era of coalition and the debate was there were also some sort of a plugging in suggestions like you bring the no confidence motion only when you also simultaneously bring the confidence motion, So that way what I'm saying, there are many reformative suggestions, but overall, even if some sort of the remnants will be there, the larger incentive will be there to complete the term. But mind it, more important is this system worked until 1971, until the fourth Lok Sabha election.
Political reality is very different from 1961. That's my only submission. You don't have the dominance of only one party in that sense. Yes, politically you have, but regional parties have come to the fore, and their concern is, I'm playing devil's advocate because both of you are agreeing with each other. Let me come to Tejas here. One minute, Tejas. The concern because you have some parties which are opposing this. They're saying, first of all, this will benefit the larger central pan-India parties. Regional parties will suffer. Issues will get muddled up between center and state. Now, you have some examples of simultaneous polls in a few states. Andhra is one of them. You have it in Odisha, and we spoke briefly about Odisha. But on a larger level, if you take this to states like Uttar Pradesh, Maharashtra, where very often the whole tone and tenor in a state election and a central election are very, very different. What happens then?
Well, our politicians are the most innovative and creative personalities we have here. I mean, they use 3D, holograms. They present themselves everywhere. They offer from freebies to everything, revenues, whatever you call them, welfare. I mean, certainly they can find a better way to communicate to the people and ensure that the message is clear when it comes to the state elections. The message is clear when it comes to the national election. Then remember, even in this election, they were successful. For example, in UP, where they managed to create this whole thing about the reservation, about Okay,
1 minute. I just want to get a view. We have former Chief Election Commissioner S.Y. Qureshi with us, joining in on the show. Dr. Qureshi, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure to have you on. And I want to come to you more than the politics of it. And if you can just show Mr. Qureshi, I want to come to you on essentially the question of how we will implement this. Imagine the scale and size. Even our general elections is something which is record breaking, the scale at which it happens. If you have to add state polls with it, and initially, of course, the suggestion is you have local body polls 100 days later. But if you have to at some point have all elections together, let's first talk about feasibility.
जी, आपने जो बात की तमन्ना, there are two things. One about the feasibility. The other is the recommendations of the COVID committee. Let me first come to the feasibility. The committee itself has reported on the basis of what Election Commission wrote to it, that they can do it, no problem. In fact, this is the best thing to happen to Election Commission if they can do election once in 5 years and play golf for the next 5 years. They will love it. And they say all that they require is 3 times the equipment, which means if we have already 20 lakh EVM, then 20 lakh VVPAT, we will require 60 lakh EVM, then 60 lakh VVPAT, because the 3 elections will be happening simultaneously. Currently, we recycle the machines, but if they're happening simultaneously, we cannot recycle them. So we need to have 3 times the machine. Now, manufacturing these 40 lakh machines each, EVM and VVPAT, this is first problem. They cannot come out of the closet by the press of a button. They are time consuming. There is no magic available there. So 2-3 years is normally the time they take, right? Then they said we also require more manpower. So manpower already is very difficult to mobilize, and 15 million people conducted the general election. And if we have to get 5 more million, that will be so much more problem. But I'm sure that and more security, all that will be the Election Commission said they will be able to do. Only thing we have to be ready with all these extra measures. And if you want me to tell you a little thing about COVID committee recommendations.
Yes. No. Please do, sir. Yes, you've gone through the recommendations, and I think they talk about phases initially, which makes sense instead of trying to do it all at one go.
Yes, I went through the report in detail, and I wrote an article in Indian Express 15 days ago, pointing out the pluses and minuses of the report. Plus is that they have recorded everything, every negative impression and every positive impression very honestly, very truthfully. All the history, the historical document, everything is truthfully recorded. That is the plus point of the committee. But now the recommendations. Some of the recommendations are almost amusing. Now, what they say that when we talk of simultaneous election, we are talking of Lok Sabha and Vidhan Sabha only, and which means Panchayati Raj elections are excluded. To me, that is absolutely. I don't want to use the strong word because the committee was headed by our former Rashtrapati. Now, there are 4,120 MLAs and 543 MPs. Well, you are talking of 1,000 people, and you are talking of a simultaneous election. 30 lakhs, 3 million Panchayati Raj elected people you have excluded. What kind of a simultaneous election is this? Now, secondly, the committee says, okay, so we can't do it together. We'll do it in 100 days. Now, that is also not simultaneous election, because an election after 100 days is a new election, separate election, requires totally separate bandobast. So many machines, the entire machinery, polling stations, all have to be repeated after 100 days. So, in the name of simultaneous election, what are they recommending? Does it make any sense?
What is the alternative?
Let me tell you, even if election commission by magic can produce all that in 100 days, all the voters who have come after taking leave from their factories, from their offices, will not be able to come back to the village within 100 days a second time. And if you deny this voting right to millions of people, it is the constitutional right which you will be encroaching on. What in the name of simultaneous election, about which, let me tell you, there is no sincerity. If simultaneous election was a sincere thing, the elections which were already being held simultaneously, like Himachal and Gujarat, why were they separated by 25 days?
No, but one minute. Sir, what is the concern? Is the concern logistical? Or
no, both, all the concerns. Yeah. One is constitutional. The one concern is definitely constitutional, federal consideration, which has been debated. And mind you, the Prime Minister had said 10 years ago that we wanted national consensus, and we have failed to achieve a consensus. Now that when we have failed to achieve a consensus, some trump card was brought in by dragging in Mr. Former Rashtrapati Kovindji, who a fine gentleman is, to head this committee. Now, what is this? In fact, it was very inappropriate to bring in a former Rashtrapati in a political committee, in a Sarkari committee. So,
your response to this, Tejas. And I want you to come in. I want you to
comment on its recommendation.
Okay, I want you to comment, Tejas, on the part of federalism. The federal.
Yeah, Tamanna. I'm not into any debate. I don't do any debate.
Okay.
If you want to ask me one-to-one, please, I have to move on.
Okay. No, 1 minute. Mr. Qureshi, I want to understand the question. Okay, let me ask you the question. I will ask you the question. No issues. On the issue of federalism, one part is the logistical part. I understand you're saying how is it simultaneous if you do it 100 days later. The other part is that why are you including the panchayat elections, etc. I understand that. The logistics, how will, you have so many people voting together, the machinery, the EVMs, all of that. But I want to understand what is your concern when it comes to the federalism part of it, because you mentioned that as well.
Yeah, federalism concern has been examined in detail by the COVID committee, and they have come up with the recommendation that so and so, there are 5-7 articles of the constitution which will have to be amended. Well, if they can be amended, well and good, because amendment will require the national consensus, because the states have to agree. If constitution have to be gone through, which this committee has very clearly flagged. We have to go through this. But I personally feel that the moral authority of the proposal has been totally diluted. Even one point which I missed earlier, what does this committee say? That suppose a state government is dissolved before its term, so the election will be held. but it will be held for the remainder of the term. Now, the fact that the election will be held again is not a simultaneous election. In fact, it is worse because now you hold an election for 5 years. You spend crores of rupees for a 5-year term election. In this case, this will be for the remainder of the term, which can be 1 year, 2 years, 3 years, same amount, same effort. But that is not simultaneous election. So one fails to understand what is the understanding of this committee about simultaneous election when their recommendations are violating the principle of simultaneous election.
Let me ask you then, sir, what would be your prescription? First of all, theoretically, do you think simultaneous polls is a good idea for India?
No, simultaneously, logistically is a good idea, but federally, constitutionally is a bad idea. Because simultaneous election will dwarf all local elections by the personality of the top leader and Lok Sabha election. And now, if you are living in a village and if the nali in front of your house is stinking, are you more bothered? Will you vote on the basis of that problem or Ukraine policy? Or, therefore, national issues will subsume the local issues, which is wrong because local issues are as important the right of a Vidhan Sabha or a Lok Sabha election.
What about the concern, and I'm wondering if in all of your experience you've seen any signs of this, what about the concern that national parties have an advantage over regional parties if they're simultaneous polls? Do you think that there's any merit to that argument, Mr. Qureshi?
Yes. Yes, this is definitely a very important concern. Because obviously, if there is a general election party, will surely have an advantage. Their leader is most dynamic, most charismatic. So, while voting for your panchayat and for your nali and anganwadi, you will not have the face of your sarpanch in your eyes. You will have the face of the biggest leader. To that extent, the local interest will get subjugated by the national interest and the national concern.
Right. So a lot of points over there by the former CEC. Thank you so much, Mr. Qureshi, for speaking with us. Since you do not want to, get into a debate, we'll leave it there. But that was S.Y. Qureshi raising some very clear concerns with the plan as it stands. Now, Tejas and Sajjan are with us, and both of you have been talking about why this is a great idea. It's the need of the hour. Now, you've heard the former CEC. Tejas, I'll come to you first, and you've heard some of the concerns that he's put out, and let's come to those points. First of all, the logistics. This is someone who's run elections, and he says that logistically, this is going to be very, very tough. What do you say about that?
Well, we also knew that Jan Dhan was tough, opening an account for everybody. We also knew that giving a gas cylinder to everybody in the country was difficult. Having electricity was difficult. It was done. I mean, let's not, if we have to get more, we have got 5 more years to go. If you have to get more, voting machines, so be it. We'll get them. We'll have to get more staff at one point of time. We will get them. I think what we are missing here is the wood for the trees, and that's the larger picture. And that is that we need election reforms. That is the larger picture here. I don't think when you talk about simultaneous polls, it means that every single election in this country has to be at the same time, in the same period. Otherwise,
it literally does. That is the idea.
No, you have got to understand it's within a period of 100 days. The larger idea
is phase one. That's initially, but that's an initial proposal, isn't it? That's an initial proposal.
I think the proposal is that you're going to have the panchayat and the rest of the elections at the same time.
Yes, but to start with, that's the idea to start with. That you start in 2 phases.
Ideally, if you can do that, or the entire country.
I have OP Rawat with me, former election commissioner joining us, former CEC joining us. Mr. Rawat, thank you so much for speaking with us on NDTV Profit as we're breaking down this very historical decision by the cabinet. Let me start with the basics first. Do you think that simultaneous polls, one nation, one election, is something that India needs? Is it a good idea for us?
Actually, this has been in the discussion for last almost 10 years now. First election commission recommended in 2015 that yes, it will be possible if some time is given after making necessary amendments to the Constitution and the RP Act for logistics and other things. So it is possible, and right now cabinet decision is about approving the COVID committee report. So things will follow.
Your view, sir, are you of the view that this is something which is good for the Indian voter amidst all of the concerns whether the requirements of a regional sort of voter or local issues which will get drowned out by central issues?
Election Commission has been in favor of simultaneous election, and in fact they were the first to propose in early 1980s, that after 1967, the parliament and state legislature elections have gone out of sync, and it has caused a lot of electioneering continuously. So Election Commission themselves recommended in 80s that some amendment should be made so that elections could be held simultaneously again. So I think what Election Commission has been thinking since then should be welcome.
Logistic issues. We just got off the conversation with S.Y. Qureshi, and he says that logistically, holding polls on so many levels will be very difficult, especially in terms of the EVMs required, the number of people required to manage this. Do you think that it's possible?
Actually, if you are talking of simultaneous election to parliament, the state legislature, then there is no difficulty, because this has been happening continuously for 4 general elections and not much of difference. There will be additional EVMs and VVPATs required, for which there will be enough time. I think 3 to 4 years will be required, and I think that time will be available. So for these 2 levels simultaneously, there is no issue. Only thing is when you club panchayat and municipal bodies elections, then the problem arises. So I think government will have to take a call. I don't know whether COVID committee has recommended that all 4 levels will be held together, because I was also there in COVID committee.
Yes, of course. Sir, they're saying initially phase 1 and phase 2, right? 100 days later you have the local polls. But one assumes that eventually you'd want all polls together?
I don't think, because these 2 levels are very different, and then state election commissions are there, the constitutional provision is there for them, so it cannot be done away with like that.
Okay, no, so fair enough. The 100-day gap you think is enough? Because that's one concern, that in 100 days if you hold polls again, do the voters actually come back?
Local elections are, very contentious, and people are very, very much involved in those elections. So if after the state legislature and parliament, these elections are held even after 50 days, they will come back, because for them, those elections are more important than the legislature and parliament.
Okay, that's a former CEC, O.P. Rawat, saying, and he was part of the COVID committee report. In fact, thank you so much, Mr. Rawat, for speaking with us, saying that it's doable. The 2 phases are important. It's important to separate the center and state elections at one end and the local body, that means your municipal elections, your panchayat elections at the other end. Different issues. The local elections are very contentious, and it's fine if you do it 100 days later. Just last comments from Tejas and Sajjan before we close this conversation. We've heard 2 CECs, 2 views on this. Sajjan, let me come to you. Is the biggest challenge now going to be actually getting political consensus on this?
Yeah, certainly that's going to be there, because political parties will respond according to their own alliance and their own current position. So any party which is hegemonic, would like to go for the concurrent election, thinking that it's going to favor them, and opposition parties may oppose it. But nevertheless, let me take one thing which S.Y. Qureshi said. I mean, see, this very tendency to infantilize the voters. Okay, you have a great deal of experience, you have run the entire election machinery, etc. for years. But nevertheless, mind it saying that when simultaneous election happen, the issue of drainage will be clouded by the national charisma. That doesn't take into the empirical evidence. Congress lost election in Kerala way back in 1957 when Nehru was at its peak. 57 was the most popular election for Nehru. Dravidian parties came to power in 67 right under the nose of Indira Gandhi. So what the point is that why can't the issues, it may be the fact that the state-centric issues may start affecting the national issues also. So that is why the criticism are not very strong.
We'll have to wait and see. We'll have to wait and see. I've completely run out of time. Tejas, just last word, but very quickly, please. Do you think this is doable? Or is this
doable?
Yeah.
And I think this time the BJP has done a better job of it by having a committee and at least, talking to all parties and the way they went about the farm bills and which, has now completely disappeared. But I think one important question you raise is on the performance of our MLAs and MPs. Do 5 years make them really, feel they're not going to do anything at that point of time?
Maybe you want a quicker danda on the head. Yeah, maybe just that. Maybe the local polls 100 days later become that sort of yardstick to hear the voice of the people. All right, that's all the time we have. Thank you so much, Sajjan. Thank you so much, Tejas, and to all of our viewers who've joined us in this special show where we break down this big decision by the cabinet to give the nod to the context or the idea of one nation, one poll.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
Hello and welcome to Talking Point. I'm your host Neeraj Shah. It's the day of the big Fed decision. All Fed meetings are watched out for. All Jackson Hole symposiums are watched out for. This is different because this may be the start of a change in stance. I'm using the term may because it's never done until it's done. The street is working maybe with the 50 basis points as well of rate cut. But before we get in our guess, I just want to lay out what the current status of the Fed move is and the expectations thereof, and what's the resultant impact on India or other emerging markets as a result of this. So let me try and pull up some words on this wall to try and tell you what's to be watched out for. So the Fed meet has begun, and the decision will be out today. The market is currently pricing in a 62% possibility of a 50 basis points rate cut. This has moved up, by the way, from about 25 basis points of a rate cut belief, which was there about a month ago. So therefore, there is a change in the market expectation of what the Fed will do. Now the point is, viewers, what if we do not get a 25 basis points cut? So the reason why I say this is because official figures showed yesterday, by the way, that the US retail sales in August were stronger than expected, and the financial situation, the financial conditions in the US are the loosest since April 2022 as per Goldman Sachs. So there is a possibility that we might not get a 50 basis points as well. Peter Maguire today was saying that there are outside talks of even 75, but I'm saying that even 50 is not a done deal as yet. So that's the first key thing to watch out for. And that may thwart the party for risk assets a little bit. But the point is the real policy rate Z score. And I'll first lay out the numbers, then I'll tell you the importance of this. Whether we get 25 or 50 basis points, this is important. Now, India on the real policy rate Z score is at 2.1, Indonesia 1.8, Philippines and South Korea 1.5, Thailand about 0.8. Why are these numbers important? The graphics will come up on your screen next. They are important because the Z score refers to the standard deviation of the current real rate relative to the 5-year average. Simply put, if this is confusing you, simply put, a higher Z score means higher real rates, and therefore India at 2.1 has higher real rates relative to the rest of the pack for Indian reasons, but for reasons which are very specific to India, but there is a higher Z score, and therefore the possibility of the rates coming down in India, if the Fed were to be the trigger point for that, or if lower inflation were to be the trigger point for that, or both. So therefore the possibility of rates coming off in India are probably that much higher, and if that were to happen, it makes fixed income a very important asset class to look at. In fact, Amundi, in an interview to Bloomberg, has laid out that real rates across Southeast Asian economies are also higher than a year ago, which suggests room to ease, a situation likely to benefit the local bond market. Now remember, viewers, what does this do? If indeed this is going to benefit the local bond market, plus our bonds are now a part of the JP Morgan Global Bond Index and a few other indices as the case may be in times to come, it could be very constructive for the Indian bond markets as well. So do the market look away from equities completely and look at bonds, or do the markets look at both? Or is there a case that because of the perceived higher valuations, don't look at equities and look at bonds? Well, our guest today will tell me, Neeraj, you are not talking sense, because he's been a proponent of equities at a point of time when everybody was talking about equities being expensive right around the election period as well. Since then, the markets have rallied another 2,000, 3,000 points. Vikas Khemani, founder of Carnelian Asset Management and Advisors, with us on the show today. Vikas, so good having you. Thanks for taking the time out. I hope all is well.
Absolutely, Neeraj. It's always good to speak with you. Thank you very much for having me.
No, the pleasure is entirely ours, Vikas. I must tell you that, because it's such an important day ahead of the Fed meet. Now, Vikas, tell me first plainly, would a Fed decision or 25 or 50 basis points, what do you expect, by the way, there? And would that decision be material for global equities and for Indian equities?
I think, Neeraj, this boat has sailed, according to me. It does not matter it is 25 or 50 basis point, according to me. The fact that the direction has changed, and I think that has been more important. Now, that 25 to 50 basis point can be important for a trader or a short-term player, but somebody who's investing from a long-term, medium to long-term perspective, the direction is more important. And as you remember in our previous conversation also about 6-8 months ago, we said that Fed rate has peaked out, and what time it turns or it changes is a matter of 6 to 12 months. Nobody can predict that. And I think now that one thing is very clear, that the boat has sailed, the tide has turned. Now, whether it starts with 25 or 50, that's not important. But from an Indian market perspective, why it is more important is whenever Fed raises interest rates, most US investors pull out money from the emerging markets because the typical rule book is, as Fed raises interest rates, emerging market import inflation, interest rates increases, and the equities weaken, and hence. And as the Fed peaks out and start reducing, emerging market receives flow, and that is what precisely happened in India. We lost a lot of, we saw a lot of outflow from foreigners, and now we are beginning to see, as the indication of turn has happened, we are already beginning to see good flows. So according to me, significance of this from Indian context is that we will see a significant fund flow cycle beginning over next many years from foreign investors towards Indian markets and emerging markets.
Okay, so Vikas, the belief or the whole thing has been that flows, I mean, in the last 2-3 weeks, flows have started to some of the cheaper Asian markets already, Indonesia and the likes, right? We are starting to see some flows in the last 3 or 4 days towards India as well. Would you see the color of the money being passive, or would active foreign money also come in? Because everybody talks about one thing, oh, valuations are expensive. I know you don't, but a lot of people do. I know you're a believer. You're saying, you've told me in the past that, valuations may be expensive, but there is growth. I'm trying to ask you, what color of foreign money will come in?
Precisely, I will say that, like I said, I will probably correct you. The point you meant, money is moving towards cheaper markets. So money is moving towards emerging market, or money is moving away from emerging market. Now, within that, there is an overweight, underweight allocation happens. Like, for example, when last 3 years, when emerging markets were losing money, India also lost money, but India on a relative basis lost lesser money because India was looking more promising. Same way, when money is coming back, initially money might go more towards the markets where they were underweight, right? Which could be, in your definition, the cheaper markets. But my point is that this money is allocation money. And then within that, like, let's say if you give me, any investor give me money to invest into equities, I might do that allocation in different sectors. Same way, money allocated towards emerging market will do different in different markets based on their own conviction. The point is that overall water levels are going up, overall flows are going up, and India will surely be beneficial on that. Some investor within that basket might find India might expensive and might not allocate. But in general, I see a situation that no allocator of the emerging market can ignore India, cannot be underweight India, because India is one of the most promising market from a growth standpoint of view. You cannot see this kind of sustainable growth in any market in the emerging market space, and hence my conviction is that India will receive very large flows.
Right. I read an article when maybe Vikas Kimani gave an interview to a newspaper which said that if indeed markets are so expensive, why aren't they correcting? And that's true, viewers, that markets aren't quite correcting. Now, Vikas, I want to ask you the contra question as well. Now that India has eclipsed China in the MSCI IMI weightage, and as per Morgan Stanley's note, very soon might eclipse China on the overall weightages as well. Could the converse happen, that everybody is saying that, oh, India might be expensive, or some people are saying, let's say, that India might be expensive and therefore flows might be muted. Can the converse happen, that because of India's weightage, we might be surprised by the quantum of foreign flows that come in this easing cycle? Can that happen?
Absolutely. I think we will be surprised. We will have a deluge of money, and in fact, we will have a avalanche of money coming into Indian markets. Now whether timing and pace, I can't really, it could be 1 year, 2 year, 3 years, but, the fact, just imagine, just analyze. China is a one market where US investors aren't allocating. There's a huge, this thing happening. Which is the large market where you can deploy billions and billions of dollars, with the confidence of growth coming around, and where you have the democracy, when you have the very solid corporate governance system, where you have the growth, where you have, so there's no market. If you ask me, yes, markets like Indonesia, but how much capital they can absorb? So point is that when money comes, India is a very, very, very large market. And fortunately, the size depth of market is increasing. One side, when people complain about a lot of IPOs and supply coming in, yes, this supply is essential for this absorption of this money which is going to come in. And that is a happy news. That's not a bad news. And the glimpse of this you can see when Japanese economic miracle played out. Lots of investors flocked to Japan. Between 1965 to 1989 was a bull market for Japan. And, initially lots of skepticism was there. But towards the end, in late 70s, late 80s, there was no investor, globally who was not going towards Japan despite being expensive. And Japan, mind you, peaked at 60 times Nikkei. PE of Nikkei in 1989. So I think, I'm not making a point that what PE it will trade, Indian markets will trade, but the point I'm directionally trying to tell you that when the money comes in, it just sort of in an allocation money, it finds way to a market. And I do believe that, and by the way, one data also one must keep in mind, US as a percentage of the world market cap today is 61%. Last time it peaked at 51%. So how much more money US can absorb, and the fact that the rate cut cycle is beginning, there's also case can be made out that US economy will be soft. Hence, you might not have the same kind of sort of equity story going forward there. So there aren't many equity markets with a good story going around the globe, and hence I see that we all will keep getting surprised with the amount of money flow which will come both from domestics as well as foreigners.
Got it. Because one counter question to the point that you just made. So paper coming in, primary paper coming in is probably welcome because it will absorb so much of liquidity that is sloshing around, both domestic and global, which will come in. But a lot of people point towards how PE exits and founder exits are happening, and whether that's a sign. In the past, that used to be considered a sign, right? Promoter bech raha hai, he knows something more than the street does, therefore go out. But I see people like you as well buying out those large chunks of paper wherein a PE firm which has been there for around exits, or maybe in some cases even the promoter is selling some stake. What do you say about that?
There could be many reasons why people sell, right? A lot of promoters selling could be a reason for people haven't seen this kind of wealth for a long period of time. So when you see this kind of wealth, a part of safety thing triggers in. B, I think many generational, next generation is not interested. So, many first generation entrepreneurs, second families are selling businesses either to PE or to to markets. So I think it is very much similar to, by the way, what happened in 80s in US. Many businesses. So basically the difference between promoter and management is getting bigger and bigger. Today we have 5-7 companies listed in the markets without promoter. There's no promoter to that, board run companies. Incrementally, this number will keep going in. Buying business, selling business will become very, very easy, is becoming easy. So this is, you can see this trend happening, playing out exactly how it happened in US. Business will acquire size, scale, tuck-in acquisitions will happen. All those things are, I think, par for the course will happen. Private equity funds sell for, because the life cycle is over, but they are deploying more capital back into the market. It's not that they're net taking away money from market, right? In fact, one newspaper wrote a very interesting thing that, in 2020, promoters sold post-pandemic almost 65,000 worth of equity stocks. Now, go back and do the mark to market of that, whether that was a smart decision or a bad decision. The point is, selling by promoters does not necessarily mean only that it's negative. Of course, you have to look at the situation, you have to look at the company. I'm not making any blanket comment. But yeah, you have to, see India's story in right perspective. According to me, we are in a very, very transformative phase. And you have to, of course, individually analyze individual opportunity, sector management. But we will be creating one of the largest wealth, or as basically 80-90% of India's wealth is yet to be made over the next 20-25 years. So we are in that kind of cycle, and once you have that, then I guess idea is to just remain invested and sit through pains which come and go.
I tell you, viewers, whenever you are slightly more skeptical about the Indian markets, you got to hear Vikas Khemani. Not just this interview, really. I mean, interview. He's been bullish and constructive for a long time. For now, it's paying off. So keep that in mind. Because where within this whole landscape are you more constructive on? Because different people, I mean, there are 1,000 ways to skin a cat. But I'm trying to understand, how does Vikas Khemani think about this?
So I think, again, India is one of the very widest story in my 25-30 years of career. I haven't seen so many sectors playing out. You have great opportunities in manufacturing, you have great opportunities in financials, technology, consumption, infrastructure. I mean, it's one of those periods where, things are happening at a great space and interesting space in every aspect. And this is one of the most widespread balancing growth. You have a domestic consumption story, you have export story, you have manufacturing story, you have services story. So, so this is where I think we are, in my opinion, again, spoiled for choices, that we can pick up what we like, and our focus continues to remain great quality managements in good businesses and at a reasonable valuation. And mind you, I am again telling you that you are able to find out, despite no matter what people make the narrative about, to give you an idea, in our Bharat Amrit Kal fund, our portfolio earning growth is 22-23%. ROE of the portfolio is 19.5%. Debt to equity is 0.1. PEG ratio is 1.1. So you are able to find reasonably priced people who make the argument of expensive, I think, are approaching markets from reversion to mean perspective. But that doesn't work in a transformative economy. Reversion to mean works in a steady state economy. But transformative economy, reversion to mean doesn't work. And that's the reason we need to study and understand different markets. And my conviction is that, there are many pockets of opportunities within those segments I spoke about. Each has to find its own comfort and, build portfolios.
Such a valid point in some sense, because just help us understand this better, right? Because you said it's a wide bucket. Where is it that, I'm not asking for stock recommendations here, but where is it that you are more constructive on within this transformative set? I mean, there might be 10 themes that you really like. Tell us about one or two where you believe that things are changing in such a transformative way that the sector earnings will look materially different, let's say 5 years out.
So I think, again, manufacturing we've been speaking about for a very, very long period of time, and
but that's a wide bucket, because sorry, but that's a wide bucket. Because
yes,
I'm sorry,
within
that narrow it down, yeah.
No, I know. I'm coming to that. So I think that's a very wide basket. But within that, I think, in my opinion, auto components will keep surprising, markets. The great story in place. We will keep seeing it within pharmaceutical. CDMO is a space, I think, is where IT was in mid-90s, and it's a very, very massive 10-20 years story. We'll keep getting surprised on that. Within consumption, by the way, we've been all along negative on consumption and its valuation for last 5 years. Last 3-6 months, we invested heavily. First time we are significantly overweight in the space, but we are able to find reasonably priced, good, high quality in the consumption stories where we can see 15-20% growth coming through. Premiumization is playing out, customer spending is playing out. So you can, within IT, by the way, which is considered a relatively slower sector, I think there are companies which are growing at 18-20% within AR&D space, which is the fastest growing segment in that space. Product-oriented companies, again, are growing very, very well. You can find those companies also in this space. So look, there are pockets of opportunities. We look at broader theme and then go and narrow down within that space what grows faster, what delivers better risk reward, and then we look for those kind of ideas.
Got it. Well, because mentioned about how CDMO is at a place where IT was, I want to dwell on a little bit on the present as well, because just stay on, because I need to get in my colleague Rucha to talk about what's ailing IT services today, because from amongst, in a very, very flat market per se, Nifty IT is sulking big time in trade today. Rucha, what could the probable reasons be?
Right, so Nifty IT is falling in trade today, and this is largely on the back of one news that came out in Accenture, wherein Accenture is set to delay its staff promotion from June to December. Now, this is the information according to Bloomberg, and Bloomberg reports that Accenture had told its employees in an internal email that they are also considering to permanently shift the promotion cycle from June to December. Now, I'll tell you why will this be happening. Now, clients generally set their budget in December for the coming up calendar year. So if the December cycle comes into the picture with respect to employee promotion, the company gets better clarity with respect to how clients are looking onto their budgets, and then the company can decide onto their expenditure like employees, ESOP costs, etc. So this might be the reason why Accenture is considering to get a better clarity on demand. Now, talking about IT as a whole, well, Citi had come out with a note on Accenture per se, the global team, when it had mentioned that surveys point to relative demand stability. Now, mind you that over the last couple of quarters, demand was into pressure because of different macro uncertainties like war, interest rate, etc. But now the surveys conducted by Citi indicates that there is relative demand stability, if not a dip in demand. Also, clients are, however, cautiously optimistic towards CY25 budget, which means that CY25, that is calendar year 25, will likely be better than calendar year 24. But different events like the federal meeting which we have and the election cycle which is coming up this year could also affect clients' budget, and hence the budget could also affect how much they spend on IT and hence reflect in the revenue for IT companies. Now, pressure also continues to be on smaller discretionary deals. Now, discretionary happens when clients have to cut out on their budget to accommodate different expenditure as well. So, pressure on smaller deals although continues, and budget reprioritization is also happening by clients. But comparatively, like if we stand right now and if we compare IT's outlook back 4 quarters back, we can see that there is relatively better green shoots, which even different companies had mentioned in the first quarter earnings.
Yeah, point well noted. Rucha, thanks for bringing that to us, because any thoughts here? You've been constructive IT, there has been a bit of a rally, but some of these rallies get punctured at times by some developments, the latest being Accenture saying that, hey, we'll do the promotions only 6 months out, and some people taking it as a sign of there being continued stress.
No, IT is one of the most closely watched sector, and I think every small item gets used and or analyzed. And I mean, my way of looking is very different. Look, again, while directionally I think sector is bound to grow. Now you can argue whether it'll grow 8%, 10%, 12%, anybody's guess. I think NASSCOM has given a great guidance in terms of sector is growing. The only thing is we have to find out within that what offers better risk reward or what sector can grow, right? This year also IT sector has done very well. If you see many IT stocks are up between 50 to 80%. And if you look at last 2 years, many stocks in our portfolio are up between 100% to 300%, right? So, point is that while, of course, very large IT companies will always have a challenge in terms of growing because the base is very large and bit of a internal changes are happening in terms of technology changes, and they are kind of going through that phase. But fact is that directionally it's growing well. We are not negative on IT as a sector, and I have said in the past also that IT is also a good play on Fed interest rates going down, and that has started playing out in last 6 months. The moment indication of the Fed cutting came down, right? Still, in my opinion, a lot of transformative work in US has not started. A lot of companies were so far spending only bare bone, required money on IT development. But I think the transformative or transformation work is yet to happen, because every company needs to spend more on tech or needs to spend more on digital technologies. Otherwise, you won't be relevant. And still, there's large, wide opportunities on that. So I think we are constructive on the sector. Now, which company to play and all is a matter of which segment to play is a matter of choice by each of us.
Fair call. That's completely understandable. Because what about other forms of non-manufacturing space? So, for example, BFSI, I know from our previous conversation that you've told me that if India is to grow the way everybody envisages it to, banks are a short presence there. What about non-banking names? We missed that part the last time that we spoke. So, both lending, non-NBFCs, and non-lending financials. How constructive are you? You may be constructive on all, but in the pecking order, do they come lower down in your overall portfolio, or are they right up there?
And we could see some bit of pressure on NIMs coming through, and hence, about 6 months ago, 8 months ago, we had more aligned our portfolio towards non-credit as well as non-bank. So we own fairly large NBFCs in our portfolio, which has done pretty well. We own, non-credit players, life insurance company, which has done again well. So I think we kind of made that, and that does not, mean that we are not bullish on the credit segment, but there's a bit of intermittent, probably 12 months consolidation, 15 months consolidation possible. And hence you kind of adjust your weights towards some of the names which you think can deliver better return in order to generate alpha. Both credit and non-credit are going to do well. I think, if you take 10, 15-year view, whether it is insurance, whether it is wealth players, whether it is any segment, you think we are significantly underpenetrated. And as wealth creation happens, as per capita income goes through, more and more savings get channelized through the same sort of 2 or 3 channels, whether it is capital markets, whether it is insurance companies, whether it is mutual funds. So all of them would be growing reasonably well. We own AMCs because we think that they are structured in a good place from a growth perspective. So all these things, I think, do us look very, very good. Right now, we are a little bit more overweight on non-credit and non-bank plays, but we are not negative per se on banks as well.
Okay. My final question, Vikas, I'm not asking you to comment on this one, but at times it becomes my job to ask you about the most spoken about thing, and that is Bajaj Housing Finance, and the fact that yesterday, as of yesterday, the market cap of that one name eclipsed the market cap of 10 subsequent housing finance names. Is this a sign of exuberance, or is it the market paying premium to a quality franchise?
Bajaj Group obviously is most sort of sought after. They've always been trading at a premium, whether it is NBFC space or this one. I think there's a huge sort of premium for that governance and execution, which well deserved. And Sanjeev is a good friend, so very, very good. I don't this sort of we've analyzed that like the franchise. Probably we find valuation slightly expensive at these levels where it is, but look, to each his own. I would not call it exuberance, but at the same time, I think yes, we have to be careful. There are stocks where there's a lot of exuberance. There are no stocks where we are able to find interesting plays. Market level, I still don't think we are in exuberance mode. Yes, there are pockets of signs, worry, risk are getting developed when you see poor quality companies also going public. Good quality management going public and getting valuation is one aspect, but more worrying aspect to me is poor quality management, poor quality businesses going public and getting good reception. That is my, in fact, bigger worry, where a lot of retail investors and lose money permanently, and that is what I will always caution against. In Bajaj Housing kind of cases, you may not make money, but you will not lose money, and that's at least a good part. But so that's where I would say the exuberance should be avoided, and we should be careful.
Okay, because excuse me for making you talk on a stock, but it was not a recommendation. But I just thought I should ask you because it's such a big talk of town. But thank you. Fabulous talking to you today. Thanks for so many insights that you've shared with us today.
Thank you very much. It's always a pleasure talking to you.
Thanks, Vikas. And viewers, thanks for tuning into this edition of The Talking Point.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch.
Welcome, you're watching the Small and Mid Cap Show. I'm Mahima Vajrajani and with me is Harsh Saita. Well, we have two very interesting managements lined up for you today. The first one is EaseMyTrip, where lots happening with this company, and we are joined by Mr. Prashant Pitti, who is the co-founder at EaseMyTrips, who joins us now. Welcome to the show, Prashant. Prashant, a lot is happening when it comes to EaseMyTrip. A lot of multiple acquisitions. All over, we want to know, in terms of what's happening, what are the kind of acquisitions that you're doing. I'll start with, the recent investment in Rollins and Fledge, which is, into medical tourism. So I want to understand that, what are the kind of synergies that you're trying to build in this particular acquisition?
No, firstly, happy to be on the show and provide explanation for the things which are happening at EaseMyTrip. Firstly, before I would like to set the context. The company has been growing ever since. We were a bootstrap company till the time we got listed. And from the listing till today, our business has grown by almost 4 times. The core travel business has grown by 4 times. The profitability has almost grown by about 5 times over the period of last 3 years. So the company is in very well solid position to continue and grow the travel related businesses. However, at the board level, we have also recently decided that we are going to be a bit diversified. And the idea behind that is that, as you would know, that there are very few companies who have been extremely disciplined and have been bootstrapped. Internet companies to become a bootstrap listed company is a very, very rare phenomena. And from that, you should understand that the promoters probably, possess certain knowledge, which are not very common. And for that, the board has decided that we will basically find another level of, find another kind of companies like EaseMyTrip in different domains who are bootstrapped, but could potentially be a listed company in the next 3 to 4 years' time. And we would be basically funding them and helping them with our advisory, with our technology, with our consumer base, and help them grow faster than before. And for this, we are taking minority stake in those companies, and a couple of acquisitions which you have seen in the recent in respect to that.
Right, Prashant, Harsh also joining in. Is this collaboration of sorts only India-centric, or is it with regard to more geographies outside of India as well? Because medical tourism, of course, is a growing sector in India. It's also a niche. So, want to try and understand as to how this play is going to work for you.
So with respect to medical tourism, it cannot be just India specific. For example, the P-Fletch company is actually a Dubai-based company. They already 30% of their business right now is actually allowing people whom they have identified have problems and can be solved in India related to surgeries. They're actually sending those passengers to India. They have tie-ups with various hospitals, and they can directly contribute to EaseMyTrip business, EaseMyTrip Dubai business. EaseMyTrip Dubai business is growing rapidly. Last quarter, we did business of about 126 odd crores. And we believe P-Fletch can help EaseMyTrip Dubai business monumentally by contributing to it. So by the nature of medical tourism itself, which is growing really rapidly, and India is becoming a very hot destination for medical tourism, we believe that it has to be at the global scale.
All right. And Prashant, what are the kind of revenues that you're expecting from this particular acquisition? And secondly, the margins in the medical tourism business are much higher. So are you expecting your blended margins to go up?
Absolutely. And more than that, but however, these are minority acquisitions. So they will not directly play a role of, onto EaseMyTrip's margin since they are on the minority side. The high level understanding is that in the future as well, we might do a play of like InfoEdge and grow the company in various other domains as well. Probably looking for more asset-light, technology-driven companies, which are something like EaseMyTrip, Bootstrap. And for this, we are going to very shortly start a website as well to allow people to apply their companies to become, so that EaseMyTrip can invest in them. So this is the larger play which we are looking at. EV is a whole different game. We already have a company called as YOLO Bus, and YOLO Bus is operating about 80 odd buses across India right now. When we acquired the company, it only had 2-3 buses. Now it is about at 80 bus. We really look forward for YOLO Bus to grow to become 2,000 plus buses in the next couple of years. And for that, we found out that the best unit economics is actually in the EV buses space, not the diesel buses. And with respect to that, we started searching for EV buses, but we couldn't find many suppliers. There is a huge shortage over there. And that is when we decided that we will basically start a manufacturing of EV buses ourselves for YOLO Bus, the operating arm to consume, and also for other government agencies or other agencies to buy from us.
Got it, Prashant. Prashant, how quickly are you able to set this business up? How quickly does the ball start to roll, especially on the EV bus side of things and with regard to YOLO Bus?
So YOLO Bus is already an operational company doing wonderfully well for us. Yes. In terms of the EV manufacturing unit, we have identified the right person to become the CEO, Mr. Manoj Soni, who's a veteran in the industry, comes from Ashok Leyland. We have appointed him as the CEO of the company, and he's rolling the ball right now. We are in the phase of doing the R&D and figuring out the right product. And then the next phase will come is basically to set up the manufacturing unit. I believe in the matter of 2 years, we should be able to launch the manufacturing unit, and which would have the capacity of rolling out 2,000 to 3,000 buses on annual basis.
And all of those buses will be used by you, by EaseMyTrip, or would you also be selling them outside, maybe to government, etc.?
Correct. So not necessarily all of them will be used internally by YOLO buses. Yes, first demands for YOLO buses will be fulfilled, and any extra capacity, there's a huge shortage of EV buses. There is very high demand from the government sector.
Sure.
To roll out in EV buses for intra-city and intercity travel, and we would look forward to fulfill those demands as well.
And that will shrink your margins, that part of the business?
Not really. That's also, as I said, that there's a huge supply crunch in the market, and hence the demand could pay pretty well.
What will your margins on that particular business be? What are you anticipating that number to be around?
Around 10 to 15%, while our current margins are at about 8%.
Got it. With regard to your incubation business, now that's something which is differentiated, because you spoke about InfoEdge and how InfoEdge has done. That's going to be unique. So how much in terms of cash flow do you all do, free cash flow do you all do annually, and how much of that will you be putting to use for your incubation business, and how much for your current business of EaseMyTrip, which you are already venturing into several businesses rather?
So as you would know, EaseMyTrip is a free cash flowing company,
yes,
where we have a positive cash flow. Last year we did a cash flow of about 124 odd crores. So we will continue as a profitable company. We will utilize our free cash flow to basically invest in these young companies, which potentially can become a listed company. Very shortly, we are also launching a platform called as raiseonce.com. Raise once basically means that just raise once to be able to get to a listed space, from bootstrap to listed just by raising once. And hopefully that raise once will come from EaseMyTrip, and we're looking forward to help those companies to grow faster and get to a listing space.
All right. So Prashant, you talked about this raise one thing. So I want to understand more on that, as well as, you've also introduced ScanMyTrip. So I want to understand both of these businesses first, and then, get into the financial aspect of that.
Sure. ScanMyTrip is basically in collaboration with ONDC. This is first of its own kind, where EaseMyTrip has become a seller and as well as a buyer of travel related services. We have co-jointly created the APIs. And on the basis of this, we will be able to sell and buy on ONDC. ONDC is picking up really well, and we want to be ahead of the curve, which is why EaseMyTrip is the first OTA which has launched this ScanMyTrip, which will allow various lakhs and lakhs of buyers and suppliers on ONDC to utilize our services.
All right. So this is targeted more towards companies per se, companies and corporates?
Not necessarily. There are a lot of MSMEs which are already using ONDC. So for MSME bookings, for individual bookings, ONDC is a platform, it's a protocol, basically, an exchange of an API, and ScanMyTrip has basically become one of the buyers and the suppliers, both on ONDC.
Okay, and then what? Okay, and then what is the kind of revenues that you're expecting from this particular, ScanMyTrip introduction, and what are the kind of margins there?
So again, it's too early for us to say all this because, we are the pioneers in the industry. This is the first OTA which is getting launched on ONDC platform, and hence it would be difficult for me to predict what kind of volumes we should expect. However, we already know that ONDC is highly, highly successful in basically getting the adoption. And if the adoption has come for non-travel usage, I'm assuming that the adoption will also come for travel usage. And hence, I'm looking forward to see numbers grow rapidly on ONDC.
And will that affect your business, Prashant? Because isn't that in some form competition for your business?
Not really, because besides the flight booking, there are various other bookings for which EaseMyTrip does not have very high market share. For example, in the holiday space, for example, in the transfer space, EaseMyTrip does not have a very high market share, and ONDC, I believe, will actually add a lot of value in such spaces.
Got it. And Prashant, with regard to quantum, is there a particular ballpark number that you all will be looking to invest through your new platform which you all are putting up into companies, raise once as you call it? How much would that quantum be?
There is no quantum which we have set right now. Okay. Both the deals which have happened are actually equity swap at the moment. The ones which is with the roll-ins and the P-pledge.
Okay.
And hence there is no cash outflow which is happening for this 90 crore deal.
Okay, so roll-ins is part of these acquisitions which you are going to be making, these minority acquisitions?
Correct. Rollins and P-Flash both are part of this minority acquisitions which we are making. And I'm looking forward to more such companies which are basically doing wonderfully well and could become the next eSmart.
Got it. And how is the medical tourism vertical going? Sorry, I'm coming probably back to where we started. But how is that one going? So how does that start contributing both to top line? Are you doing it standalone by yourselves? Are you all doing it in partnership with someone? And what are the target geographies that you have?
So medical tourism is actually there are a lot of nuances around it. It's a beautiful industry, rapidly growing. India is becoming a hot destination for medical tourism, and which is why we have forayed into it along with the P-Flash. P-Flash is one of the leading service providers for people in Middle East and CIS countries and help them to come to India for their medical needs. And we expect that this business is going to ramp up pretty rapidly. And we look forward to become part of it as a shareholder and as well as travel service providers to the people who are coming to India for medical tourism.
Going to do it only through P-Flash? Is that how one looks at it, Mr. Pitti?
For the countries which are in Middle East and CIS, yes, we would do it through P-Flash because they need to be the originator of customers. The customers, we don't know those customers. P-Flash, what it does is it provides home care to people in Middle East. Now, when they are providing home care to people in Middle East, they are already in touch with customers and hence they know people who need medical tourism to come to India to get their ailment right. And hence they become the source of the origin of the customers who are coming to India and hence we would work along with them.
And do you all get a revenue share as part of this? Of course, 30% is your ownership in that company, but do you all also get a revenue share out of this? Does it contribute to top line?
Absolutely.
And what is that percentage, if at all?
That is not something public. In future, we probably will disclose more as.
And outside of these geographies, would you also be exploring US?
Absolutely.
Okay.
Absolutely. So wherever there is big medical tourism, we are looking for companies like P-Flash, based out of those countries who can basically do origination for medical tourism to create demand for India.
And have you all tied up with partners in India correspondingly? Because that's something you all will need.
So P-Flash already has multiple hospitals with whom they are working along with. Our responsibility will be to take care of the travel part.
Understood. Understood. That makes sense. Got it. And with regard to the 1,000 crore fundraise, of course, you've also suggested 200 crore to be invested in your manufacturing facility. Just one quick clarification. So where does that 1,000 crore go, or where does the balance 800 crore go? And is the capacity going to be at 4,000 to 5,000 buses or 2,000 to 3,000 buses?
The capacity, annual capacity is going to be 2,000 to 3,000 basis. And the fundraise, we have taken a board approval to raise up to 1,000 crore rupees. We are speaking to few investors to see if we can, if there is a demand. Right now, there is basically we are in the phase of understanding the demand. The board approval is already there, and as and when any next steps happen, we will be informing you.
Okay, thank you. Got it. Thank you so much, Prashant. It's been a pleasure chatting. Of course, lots happening with eSmart. Wish you all the very best, and we'll chat with you very, very soon. Of course, post the Q1 numbers, Q2 numbers. I beg your pardon, to get better stock of what's happening. Thanks so much.
Thank you. Thank you.
Right. Let me also bring on board Abhishek Kapoor, Group CEO, Purvankara Limited. We'll continue our chat. Abhishek, I want to quickly first off understand from you. Firstly, welcome. Good morning.
Good morning.
Let me understand from you how demand is playing out currently, because the last we spoke, you spoke about very robust demand. You spoke about execution being something that you all are looking at very actively, and that's basically the focus has shifted towards execution given the kind of demand that there is. Is demand really holding up, and how is pricing shaping up for you?
Harsh, as an industry, I can share with you, I think demand is continuing to hold up. The challenge really is on the supply side, as I mentioned earlier, to bring in new launches, and the supply is still continues to be a challenge in most of the markets that we operate in. I would expect now with the festive season that the demand will be better than the first quarter, and then going forward, the third and the fourth quarter definitely will be a better quarter, as it is, annually, because that's the general real estate cycle, especially in residential for us. Most of the demand really comes in the third and fourth quarter. So I think the industry is looking forward to the festive season.
Right, Abhishek, Mahima also joining in. You have a couple of flats in pipeline. I want to understand what is happening on the execution side of things. And overall in FY25, what kind of overall execution timeline are you looking at?
Mahima, thank you. So, as far as execution is concerned, last quarter we delivered about 1 million plus square foot. Our goal this year is to deliver over a 4 million square foot, and that's a target we are working towards. And we believe that as we increase our launch